Jack Caffrey.
Jack Caffrey.
Equity portfolio, it's like an abbreviated Caffrey. Equity portfolio manager, JP Morgan Asset Management. I guess it just to try to distill down what you're saying, the market's not cheap. There's some positive things that you see happen, but we definitely have gotten back to a point where it's not cheap. And would you call it an AI premium?
Certainly, if we try digging into valuations, the market trades at 23 times earnings.
Is that if you back out the big stocks?
Let me back them out
okay.
for you.
Is it 17 then?
If you look at a cap weighted multiple, it's closer to 29 times earnings.
Oh boy.
23 across the index, and median stock is trading about 19 times earnings.
19.
So you have a magnificent cohort, and call that's been driving anything touching AI, and that's been driving 70% of the gains this year. That's not just chips, that's not just the software, but it can be the industrials that wind up building the shell, that build the air conditioning, to keep those very expensive chips happy and operating in their environment. Step away from the AI trade, and the market's been a lot more calmed. You can think of it sort of as the forgotten 493 for the non-magnificent 7 names. And that's one where hopefully lower interest rates, hopefully policy clarity can let companies be a little bit more confident with their spending decisions, and you can see a broadening out of the broadening in the market.
Even in the Russell, which what you probably say we've been seeing in recent sessions, still not at an all-time high, but there's some broadening out. So we were talking yesterday about how we've gone from where we were really worried about everything in April and how it was going to work out. And then for a while we were hoping everything was going to work out. You say at this point, the notion is things really are going to work out, and even better than people thought. And that makes you nervous, probably.
If you look within numbers, earlier this year we were thinking 5% growth for the year. As a result of going for earnings season, it's closer to 7% growth. Earnings. That's really been just a surprise we've experienced, and our forecasts are for closer to 13% growth next year. This sort of snugs that up over time, and yet that leaves the Fed in a bit of a quandary. Unemployment's not that bad.
In the past, I think it was Larry or something said that 3.5 is okay. And if you do the math in 10 years on 1.5 on inflation, it's very debilitating at that extra 1.5.
Yeah.
But Summerlin, who we're going to have on, says, these numbers, we don't really know exactly where 1 to 3. Anything 1 to 3 on inflation is within the Fed's. So now that people are arguing that maybe it can't be such an exact science, and that 3 is okay.
Well,
you think 3 is okay? You like 2? Is the Fed going to move the goalposts?
I think the Fed moving the goalposts will cost the Fed credibility.
So you like 2? I like 2.
I like, I recognize that the only thing I have massive confidence in is economic data gets revised.
Yeah.
So anyone who completely hangs themselves on any one data point is setting themselves up for disappointment. I will push back to the idea we want to look at the overall trend in surprises, better or worse. Better surprises gives you more confidence in earnings. Ultimately, you're talking to an equity portfolio manager, so I generally think equities are a better place to be.
You're just managing portfolios. You're not setting year-end targets to the S&P. You're not stupid enough to do that.
I'll give you time or level, never bet. But I'll go back to the idea of, the trend in earnings has been
107,000.
Hello, this is Dr. Paul Cottrell, and we are live streaming on Rumble, YouTube, on my website, the-studio-reykjavik.com, and simulcasting on X Spaces. This is an interactive show. If you have any comments about the news that I'm covering today, please type it in the chat or in the comments section. You can also join X Spaces and ask a question about the news or give me your opinion. This is an interactive show. Thank you for joining. I greatly appreciate it. Please share the links. Ask your social media to follow me. Also, make sure that you follow me on the 4 channels that I have on YouTube, Brighteon, Bitchute, and Rumble. You can follow me on X. I have 2 channels on X and also on GETTR. A great way to help support the work, because all these videos I do are for free, is you can donate on my website. You can donate through Stripe, PayPal, or Buy Me a Coffee. You could be a paid member to my Patreon channel. Again, all of this stuff that I produce is for free. So it's through individuals that are helping support by sharing the links, asking their social media to follow me, donating, being a paid member to my Patreon channel, which is a great way to help support. Or better yet, purchase the great products that I offer. I have very high quality supplements that if you follow my direction in terms of how to take them, those different stacks that I'll tell you throughout the show, you're going to be able to target certain areas of your body and slow down the aging process. Now, I'm in my 50s. I'm very healthy. I have learned on how to use a holistic approach, coupling with my educational background to mix this knowledge and experience to slow down the aging process and to have more vitality and longevity. There's a big push in the health and wellness world category of trying to learn from sports medicine, trying to learn from geriatric medicine, trying to learn from aging research. And a lot has come out and published that gives us a means to move in the right direction to slow down aging. All right, this is not foo-foo or anything like that. This is very, very high-end stuff, right? And it's kind of simplistic if you just sit and think about it. But to get to this point, it wasn't so simple. But aging has multiple dynamics to it. Part of it is inflammation. Part of it is a buildup of oxidation, free radicals. Part of it is a declining immune system, declining pancreatic system. Digestion starts to become a problem, gut biome. So all these things are important to kind of understand the mosaic of what we would call aging. Well, if you target these different aging variables, you can slow down this process. Now, you can't go from 50 years old to geriatric, you can't go from 50 to, let's say, pediatric, right? Or geriatric to pediatric. But obviously, you can slow down the aging process. There are these people called, slow agers, or, there are individuals that age slower. Now, researchers have found some of the reasons why this is happening. Some of it is diet, some of it is genetics, most of it is not genetics, though, but some of it is genetics. Some of it is epigenetics, all right? And genetics is like your DNA, right? Your DNA and what's your composition for a certain gene, what's your sequences for certain genes. But some genes are expressed more than others. And as you age, you go through a methylation process. Through stresses in your body and in your cells, right? Stresses in your cells, the methylation changes, all right? Well, if you have less stress or less of those variables that produce methylation of those genes, you will age slower. That's the key point here. So if you bring down free radicals, if you bring down inflammation, if you boost up the health of the mitochondria, you're not going to methylate your genes as you go to these different milestone gates for your genetics. So it's really epigenetics, not genetics. Some aging is genetic, all right, some, but a big part of it is epigenetic. So you need to kind of like realize that the choices we make in our lifestyle will accelerate or decelerate methylation of genes. Now, if you want to anti-age, you want to decelerate the methylation process. If you want to age faster, well, continue on a stressful life and bad choices. So I will tell you how to do this. Now, in sports medicine, you can learn from certain things, like how musculature is so important for certain areas of your skeletal system to actually slow down the aging process. And if you overwork out, you're actually producing more free radicals. And how do you mitigate that? So there is such a thing as overworking out. There is such a thing as underworking out. There is such a thing as if you're just doing resistance training, you're doing it wrong. If you just do cardio, you're doing it wrong. If you just do yoga, you're doing it wrong. See, the key is taking the best of all these different things that people have been doing over the decades and putting them together in a holistic way with the proper diet, exercise, and supplementation. And by stacking these supplements in a certain way, you're actually getting max benefit. If you take D3, just D3, all right, you'll get some benefit. You'll be able to absorb calcium. It will, help with certain gene expression because it's a gene expression cofactor. It'll get rid of cells that need to go into apoptosis, but you're not maximizing it. If you just take D3 and nothing else, you're not maximizing what D3 can do. But if you mix it with a bunch of other stuff, I'll tell you how to take D3 to actually reverse cardiovascular disease. But it has to be mixed with other things. That's the key. That's the key. The key to supplementation is the stack. So people would say, well, the research says that they're only looking at it from a one compound perspective. That's not how your biochemistry works. Your body doesn't work with just one compound. Your body chemistry works in multitudes of compounds with feedback loops, positive and negative feedback loops. The body is a very complex system. So if you're going to try to slow down the aging process and slow down methylation and slow down the degrading of your telomeres, don't you think it's going to take a multitude of variables to do that? Of course. So if you pay attention to me, I will actually get you healthy. And you won't need to be on pharmacopoeia, or you're reducing your probability of being on pharmacopoeia when you're in your geriatric years. Now, if you don't listen to me, don't be surprised you have a problem. Okay. With that, let's go to Bloomberg.
Importantly, it's going to be difficult to assess what we maybe would have relied on. How does trade impact goods relative to How does the economic cycle impact things like services? We are seeing trade impact to both sides of the data here.
Lauren, I got to ask you about Scott Bessen's comments yesterday on surveillance that any model shows that Fed funds rate should be lower by 150 to 175 basis points. John Authors today says this is breathtaking. He says that with current effective Fed funds rate at 4.3%, Besson is suggesting it should be around 2.6. Over the past 70 years, the rate has never been that low with inflation as high as it currently is. We had core CPI at 3% yesterday. So apparently any model now shows the U.S. monetary policy has been misguided throughout that entire period and needs to be changed. What do you think as an economist?
Well, for starters, I have to congratulate Anne Marie and Jonathan on that interview, which was fantastic. Such an interesting interview. And when it comes to the neutral Fed funds rate, it's a matter of hot debate among economists, really any time in the economic cycle, but times like these are so much more interesting. I think regardless of where inflation is today, we have to think of the neutral rate related to,
Let's pick it up on the other side of the.
All right, the S&P 500 futures is trading at 6,461 right now. It's down 27 points in the futures market for the S&P 500. Please go to my store, the-studio-reykjavik.com. Some of the great products that I offer are structural nano silver soaps. Very high quality. You can get it in lemongrass, in charcoal tea tree, in lavender, and also in peppermint. Very high quality soaps. Get a few bars for your household. Help support the work that I do. Again, all these videos are for free. I'm going to tell you how to trade the market, how to make some money in the market. I'm also going to tell you how to slow down the aging process and be healthy. Pretty good deal. Go to my store, the-studio-reykjavik.com. If you use discount 5, all caps, discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. Detoxifying your body is super important. Why? Because if you have a bunch of toxins in your body isn't going to perform as well. Your immune system isn't going to perform as well. Your endocrine system isn't going to perform as well. Your brain function won't perform as well. Your other organ systems won't perform as well. And you will age faster. So if you detoxify your body and detoxify the environment around you, you will slow down the aging process. Have you ever noticed that people that live in a dirty environment actually look older? Have you noticed that people that are chronically sick, even if it's somewhat mild, but they're chronic throughout the year, age faster? Have you noticed that? So clean your environment, drink filtered water, drink the filtered water, and also make sure that you eat foods that aren't processed. Processed foods are bad for you. All right, and then clean your house from these toxic chemicals like paints and paint thinners and harmful pesticides and all this stuff. If you have to have them in your house, put them in a double layered container so it's not decasting, because a lot of people don't realize when you're in your house, you're breathing in small, minute concentrations of this in your air. And over time, over the years, it will build up in your body. Zeolite is going to bind to heavy metals, toxins, and chemicals, including forever chemicals, and it's going to be able to bind and allow you to urinate them out within 6 to 8 hours. It works better if you detoxify your body every day. Now, you do that by taking 3 small drops of zeolite. The market just opened. So 3 small drops underneath your tongue and drink the filtered water. Do that every day. Some people prefer a heavier detox. To do that, you use 10 drops, small drops underneath your tongue. Drink the filtered water until the bottle's done. You do that once or twice a year. I prefer to do the detox every day because you're exposed to toxins all the time. So it's better to just go through a maintenance dose. So please go to my store, the-studio-reykjavik.com. Link is in the description of this video. Get the zeolite, very high quality way to detoxify your body. There's other ways that I will talk about throughout the show on how to detoxify your body. Use discount 5, you get $5 off any order. Spend $100 or more, you do get a free gift until supplies last. Now let's go over the market right now. So the market The S&P 500 is at 6,445. The VIX is at 15. The Euro USD is trading at 1.16, so actually the dollar is a little bit stronger compared to yesterday. Oil is trading at 63.61. BITO, which is the long ETF for Bitcoin, but it's a leveraged ETF with a leverage decay, so you got to be careful with that. It's trading at 21.42. Bitcoin is trading at 118,000. USD Japanese yen is trading at 147. Now, the indicators for stress in the equity market is if the yen starts to strengthen. So if you get closer to 140 on the yen, that's bad. All right, bad for equities, usually. If the VIX starts to go above 20, bad for equities. But because the VIX is below 20, it's at 15, and the yen is at 147, that's risk on. Even with the bad inflation, we'll go over that. So my target for the S&P 500 is still at 6,800 to 7,000 for year end, okay? And we'll reevaluate. At that time, you may want to take a little bit of money off the table and wait for a little bit of a correction and then redeploy. But I think that right now, the market most likely will be trading at about 6,800 or 7,000 by year end. The Federal Reserve, the question will be, will they do a quarter point or a half point based on this new data that came out? Yesterday, CPI data came out. So yesterday or the day before? I think it was the day before. But CPI data came out, consumer price index for inflation. That came out a little bit more than expected, just a little bit. And for month over month. And the year to date was a little higher, and the annualized, so year-end projection for this year is projected to be at 3.1%. The Fed target is 2%. So the question is, will they cut if inflation is at the 3 handle? Most likely not, all right? But if they do cut, it will be a major accelerant for equities. So there's a big question mark, will the Fed cut this year or not? Now, today, the PPI came out. So the prices of wholesalers and producers, what their price part of this increase is, all right? Now, that was expected to be at 0.2 or 0.3, and it came in at 0.9. So it's much higher. So the big question is, why? And we'll go over this, but some of the data, big part of the data was showing that services was actually driving the number. Well, if it's services, you don't import services. So why are services increasing while other stuff is not increasing as much? Why is services increasing so much? That's a big question. All right, and probably these companies are playing games. They're increasing because they're trying to fly underneath the radar, saying, "Oh, inflation," and they're raising their prices for services. Now, if you anecdotally look at some of this stuff, and you look at what's happening where you're shopping, either in the mall or in small towns or maybe even online, you're probably starting to see a lot of stores, especially online, doing these major discounts. Well, if that's the case, if they're doing major discounts, then that's probably not going to show a real inflationary pressure. If you're looking at core inflation, which is removing food and removing energy. So if you're looking at core inflation, on services are going up, but some other items that you're purchasing for home may be going down if you're savvy with the sales that are taking place. It's going to be interesting what the real number will be at the end of the year. Will it be at 3.1%, or will it be below? If the numbers start to come in near year end at around 2.7, 2.6, it's probably going to be where the Fed probably should lower rates. So we'll see. But prices are going up at the producer level. Prices are going up slightly at the consumer level. But a big part of the producer level was services, not goods manufactured. Okay.
It's actually moved higher even as the policy rate's moving lower. I don't think that's what the markets want to see.
It's interesting, that point that you're making, that if we start to see that political influence, that'll pressure long end rates higher. I hear that as part of the logic for why some folks here like steepener trades. So let's talk about the first front of that trade. What's going on at the short end? It feels like people are just continuing to pile into shorter dated bonds, including paper, including the likes of money market funds. It just seems like that is a trend that will not be broken, Lauren.
So one of the reasons why I see this trend persisting has less to do with what's happening at the short end of the curve, because that would actually discourage investors piling into money market funds or even short duration bonds. If that is cutting, then you're potentially getting less income in those areas of the market. This is really about risk. See investors that facing valuations in equities that are high, that might be looking to build some resilience. But where we like to be is staying invested in bonds. But there too, there's an element of short duration that makes sense. Again, less about interest rates and more about, if I think about the default horizon for a company, in the next 2 years for US publicly traded credit, I am not concerned about a meaningful uptick in the default rate. I might be concerned about credit spreads widening, but when it comes to the ability of these companies to pay their debt, to pay a coupon, I'm not concerned about that. And that's an interesting income generation opportunity.
Yeah, absolutely. Even with spreads super tight right now, Lauren, we have to leave it there. Always great to speak with you. That is New York Life Investments economist and chief market strategist, Lauren Goodwin. Meanwhile, we're just about 7 minutes into this trading day, so let's get a check on this stock market. Only down about 0.2% on the S&P 500. But what's interesting here is that breadth is super bad right now. You only have 66 names in the green, well over 400 in the red right now. The companies that are trying to move higher today, you have Amazon, Apple, Netflix in the gainer seat, but very small moves overall. Take a look at the downside. This is where things really get interesting. NVIDIA lower by just 0.5%, but this company is so big that that is your biggest weight on the index. Deere, we know that they delivered some pretty disappointing earnings. You can see that reflected in the move today. Tesla, Meta, Home Depot, Tapestry, the list goes on. So this bad breath, you're going to see it when you look at sectors as well. You have one lone gainer today, that is consumer discretionary, but take a look at all this red. Right down at the bottom, industrials, real estate, and materials fighting for biggest loser today. Materials currently in that position, down over 1%, Matt Miller.
All right, so some pretty decided moves to the downside coming, I will repeat though, from an all-time high at the close yesterday. When we come back, we're going to talk about bullish, speaking of, extending gains as the crypto industry celebrates another stellar.
All right, let's take a look at some of the other news that's popping up. Let's go to CNN and their take on the inflation increase.
Imagine bringing your side project to life just by thinking about it. Meet Base 44, a complete AI creation platform.
Breaking just a few moments ago, key new data showing wholesale inflation heated up last month. That's a potential sign for the prices consumers may see on store shelves in the months ahead. Let's bring in CNN's Vanessa Yurkevich, who has been tracking all of this. What are the headlines here?
Yeah, this report just out showing that the prices that businesses pay has heated up. So you're looking at a year-over-year change of 3.3%. The estimate was an acceleration to 2.9%, so obviously above that. And then on a monthly basis, the estimate, what people expected was 0.2%. That's coming in at 0.9%. Wow. So quite a bit higher than what was expected. We are seeing increases both on the goods and services side. So the products and then the services like airfares or hotels, all of those categories on the rise. And you can see that uptick just right there in the month of July.
No, think about that. No, you gotta break this. When you're looking at this data, it's not so cut and dry. You gotta kind of like dive in, look under the hood, right? So if the expectation month over month was 0.3 or 0.2, I think it was 0.3, and it came in at 0.9, then if that's sustained, then obviously we're going to have more, we're going to be above the 2% target by year end, right? For sure. Now, this composition between manufactured goods and services. Now, let's just dive in a little bit deeper on the services side. Airlines. If airlines are costing more, right? But energy costs have been going down, which is the biggest, or one of the biggest cost drivers for airlines, especially for variable costs. So it just seems as though some of this is how much are the CEOs trying to use the tariff issue as a means to squeeze more profitability, trying to pass more costs onto the consumer, even though they're not affected by tariffs. Airlines, let's say JetBlue, for example, or Delta. Energy costs have been going down, not up. Their salary contract negotiations are already set in a contract. So that's already known. So what are they doing here? It's either people are spending a lot for travel, or or the CEOs of these airline companies are trying to squeeze more profitability out of or going to squeeze the customer more in the future, because there's a bit of a lag between the PPI and the CPI in some cases, especially with this airline thing. So how's airlines cost really going up? Where's the cost? How's the service sector going up? This is a big question here. Is this what's going on? Especially if you're in a service sector is not related to the tariffs. This kind of goes in line with what I was saying before. If you raise the inflation, if you have inflation above the 2% and you have unemployment below natural unemployment, which I think is 5%. Some people think it's 4.5, but I think it's 5%. All right. But if you lower rates with those situations where you have above 2% for inflation and you have below 5% for unemployment, and you lower rates, that's inflationary. So we may be seeing what the CEOs are predicting is that there's going to be an over demand for their products, right? And they're setting up for it. They're going to be setting up for it, and we may see a pulse that happens in the CPI that we haven't seen yet. But that's not tariff related. A lot of these service things that are in the PPI would not be tariff affected. So what's going on here? I don't know. So let's just keep on listening here. But it's important to understand that 0.9%, a good component of it was services. What's driving the price?
Recovery after those pandemic highs. Key things to look at in goods. We saw the price of food, the price that businesses are paying for food, up 1.4%. And look at this. This is interesting. Fresh and dry fruits and vegetables, kind of a category that is interesting to look at because we import a lot of vegetables, but not from countries that are heavily tariffed. So there's something else going on, but this accounted for a quarter of the increase of all goods. This could be because of
25% of the PPI number increase was due to fresh and dry fruits and vegetables. What's going on here? Do we have a shortage of, are we, now you got to remember, food is based on supply and demand. The demand is relatively inelastic. The supply could be affected by droughts, floods, whatever. Are we starting to have a problem with our food supply? What's going on here? And it's not affected by tariffs? So 25%, as she said, 25% of the increase, which is 0.9. 25% of that, which is 0.225. So let's just round it, 0.23. 0.23 of increase in inflation is because of food. Why? Why? Where is this coming from?
Labor issues with immigration, it could be weather, it could be transportation costs, which also rose in the month of July. And then on the services category, you saw transportation and warehousing really increasing there. Trade services, these are the margins that businesses take in. Those actually grew, and that is because maybe they're passing more of their costs down to the consumer. And then finally, in terms of travel and accommodations, on the rise again. So you're seeing hotels up 3.1%. But if you see there, look at that dramatic increase
Think about
in
it.
the month.
With airlines and hotels, prices go up only if there's a demand. They won't raise their prices if there's not a demand. So what's happening here? Are people spending more for vacations? Or are people pulling back? And I think people are spending more on vacations.
When we saw levels that really we haven't seen in a while, and July now indicating a huge spike. The reason we look at this report in particular, Jessica, is because ultimately businesses will have to make a decision. Do they pass this down to the consumer?
Right.
Clearly they're paying more, and does that end up with all of us?
So the thing is that
Also,
if he's right, but the prices that she's talking about are not tariff related. Our food isn't tariff related, or the far majority of it is not tariff related. Let's put it that way. Immigration, well, maybe the cost to actually harvest is going to increase. That's possible, but I'd be surprised that it goes up 38%. Transportation should be lower because diesel and gas and natural, those are all going down, not up. Especially, oil was a lot higher during the Iranian-Israeli war that happened just a couple months ago. So why is it that transportation is more expensive? That doesn't make sense. Why? I mean, the big driver is energy. So something doesn't seem right unless the economy is more, there's more demand in the economy. If there's more demand in the economy, I can see this happen.
Angeles, moving more than 1 million containers in July. That's a record month. What does all that mean?
Well, it sort of makes sense, right? Because you had a lot of businesses bringing in a lot of stuff to beat the reciprocal tariffs that were expiring on August 1st and then went into effect on August 7th. And then you were having a lot of people move a lot of stuff in from China, trying to beat those tariffs potentially going up. There's been a 90-day pause since then, but 1 million containers, more than 1 million containers.
I know why this is happening. So the pull forward, I get it now. The pull forward there were many companies that were buying inventory because they were worried that there was going to be a major jump in tariffs, which didn't happen, but they thought there was going to be a major jump. So there was a lot of buying forward. So it takes a little while to make it and then to ship it, and then it's in the ports and then processing. So the reason why transportation is more expensive is because they have more deliveries. That's why. Because there's a certain supply that's inelastic of the number of drivers you have, truckers, the amount that you can put on a train, right? So the whole transportation sector has had a surge of demand. So because of that surge of demand, because of the pull forward, prices went up. So that would explain why transportation's up. And that may actually explain, depending on how they do the data for food and dry foods, if that is including transportation costs or not. If it is including transportation costs, then it's starting to make sense that why the food's more expensive.
Moved in the month of July at the Port of Los Angeles. That's an 8% increase from the previous year and really trending up 5% on the year in terms of imports that they're bringing into the port. Gene Soroka, the head of the Port of Los Angeles, said, though, that he believes that the surge is behind us. He believes that surge was because people were trying to get stuff in before those tariffs rose, but likely the rest of the year will kind of resume back to normal levels. But not surprising that we saw this increase in inflation for businesses, given that they were buying so much and bringing that in and at a higher rate.
Right, and so as you know, the question now is who pays, who does the consumer pay for that
How
as
much
well?
can they take on?
Right, all right, Vanessa, thank you so much. Kate?
It's not just how much they can take on, it's how much will be passed over. And it's going to be approximately a third. This is already baked in. It's approximately a third. In some categories, maybe a little bit more, in some categories less, but approximately a third on the average. All right, so the PPI is because of the pull forward pulse that took place. But it doesn't make sense about services. Some of the services,
now for some more important.
some of the services, like airlines, why airlines? That must be demand driven. Now, for the ones that are listening, maybe you can type in the chat, or the ones that are listening on X Basis, you can type in or just ask for the mic. But in your environment, in your circle of friends or family, are you spending more, or are people around you spending more than usual for vacations? I'm curious, because why is it that why are airlines and hotels more expensive? That would only mean that there's a demand. Now, it's the summer months, that's true. So maybe this is seasonal. Maybe this is a seasonal issue for that. But is there an additional demand pulse? From what I'm noticing, I think there's less people actually vacationing, or at least pulling back on what they would normally spend. I think there's a pullback, not a push forward in spending for vacations.
Context on this is the senior markets reporter at Axios, Madison Mills. Thanks for coming back in, Madison. Okay, so producer price index, an important read. How surprising is this?
It's a huge upside surprise. It's the biggest monthly upside surprise that we've had in 3 years. We were expecting a 0.2% gain. It came in at 0.9% month over month here. This is really critical because this goes into another data point that the Federal Reserve is keenly looking at when determining whether or not to cut interest rates. And we had the Treasury Secretary talking about a 50 basis point cut in the September meeting. A data point like this is going to...
If this is not just a one pulse situation, we are definitely going to be above 3% for inflation this year.
that very difficult for the Fed to justify.
Another data point that they're taking into account, and everyone has to, is so after Tuesday's not as bad as it could be consumer prices reading, added together with this, what is the picture that it's painting? What story is this telling?
Well, it's telling a story of a market where we're going to continue to see prices going up. The CPI print that you mentioned, that's more backward looking than this data. This tells us how producers, how companies are thinking about pricing going forward. So it's more of that forward-looking data, and it's painting a picture of prices going up. You were just talking about the Port of LA as well, and how we did see companies pulling forward their inventory. So maybe they didn't have to raise prices so much previously because they had stuff bulked up, and now we're starting to see the impact of that.
They pull it in, and then you will then see the consumer prices obviously going up eventually when that slows down, which gets me to what we have heard from the White House and the president, because whenever we have the White House on, they are very adamant that prices are not going up. I mean, they believe that prices are not going up, and that's what they see. But because of that, the president has been lashing out over and over again against anyone who says that they are. That includes, of course, last week, Goldman Sachs. He reached out via social media to the Goldman Sachs CEO and said that he should fire his lead economist over a report on tariffs that he didn't like. And yesterday, Goldman Sachs pushed back. Let me play this.
We stand by the results of the study. Our conclusion is that U.S. businesses have borne most of the tariff costs so far because it takes time to negotiate lower import prices or to pass price increases along to consumers. But if the most recent tariffs, like the April tariff, follow the same pattern that we've seen with those earliest February tariffs, then eventually, by the fall, we estimate that consumers would bear about 2/3 of the cost.
And by the fall, we're definitely going to have some answers to that.
I don't think it's going to be 2/3. I think it's going to be 1/3 because there's going to be the savvy buyer is going to look for sales. They're going to wait. They're going to postpone their purchase until a sale comes, and then it'll go back to the normal rate. So no, I don't think it's going to be 2/3 to the consumer. I think it's going to be a 1/3. There's too much competition.
This really is the president. The move of like fire your economist because I don't like their read, or I'm going to fire the head of the BLS because I don't like the July jobs report. That level of doubt and uncertainty that it injects into the economy. Are we seeing evidence of that?
Well, it's difficult to parse at the moment is you talked about the CPI numbers this week. Those looked pretty good for the White House on the inflation front, but then today's numbers showing the opposite story. They're showing a story of prices going up. So it's difficult to suss out how the White House feels about the data when, depending on how good the data is, their messaging might shift. Going forward here, what I can tell you is that I like talking to people at these companies because they can tell me how they are viewing prices, and it seems like it's very company specific. You just heard in that soundbite, it's sector specific as well. In today's data, it looks like wholesale manufacturers on things like machinery are really struggling with tariffs. And so it's going to be that kind of detail going forward that's going to help us determine where prices are getting higher at the most.
But an important read today to add in some more facts and data to this picture.
PPI coming up higher, CPI a little bit higher than expected, but not too bad. It's actually, the CPI was good on Tuesday, PPI bad for inflation targets. This all being amalgamated in an econometric model is going to tell the Federal Reserve lowering rates is probably a bad idea right now. Please go to my store, the-studio-reykjavik.com, get the cleanse. This is 30 parts per million. This is part of my the first pillar of the core protocol, of the 4-pillar protocol. The first pillar is taking max 35 or max 14 or cleanse. You take a teaspoon a day, swish it in your mouth, gargle, 20, 30 seconds, and swallow it. What that will do is boost up your immune system. How does it do it? It improves the health of the oral cavity and the oral pharynx, helps the mucosal barrier, and helps the health of the epithelial lining. When the epithelial lining and the mucosal barrier is healthy and not damaged, your immune system will be better, and therefore you're going to be able to weather certain things during the fall season. So it's really important to take. I've been taking Max 35 or Max 14 or the different brandings of Cleanse for 5 years. And I've been taking a teaspoon a day, every day. If I'm not feeling well, I take a tablespoon or two and I go back to my maintenance dose. If you have someone around you that's not feeling well, it behooves you to take a tablespoon a day. Now, I also have a great probiotic. Probiotics are super important. It's a foundational piece. Multivitamins and probiotics are foundational pieces for the health protocol. Now, taking a good probiotic, this is a powdered version that you just mix with soft foods. I mix it in hummus for my for my lunch. Or you can mix it with, let's say, filtered water, but take it every day. Good probiotic is going to help your gut biome so you can absorb your nutrients. You'll have a better metabolism. You'll have a better communication between your gut and your liver and your gut and your brain. You'll be able to sleep better. You're going to be able to get rid of that brain fog. You're going to be able to concentrate better. When you have proper sleep, you're consolidating memory, so your memory should improve. You'll have more energy because you're well rested, and you're detoxifying your central nervous system. Also, by taking a good probiotic, you're helping with your skin, your hair, and your nails. A lot of people don't realize that a poor gut biome, if someone knows what to look for, you can see it in their skin. Now, if you take a good probiotic, what also will happen is the mucosal lining within your GI system is going to be thicker. And that way, you're going to have a more robust gut biome, a healthier gut biome, and you're going to have more concentration of IgA. So your immune system is going to be better. Super important. If that mucosal lining starts to shrink and you have lower concentrations of IgA in a poor gut biome, what's going to happen is you're going to have leaky gut syndrome, you're going to have digestion problems, gut irritations, maybe even, allergies. So it behooves you to get a good gut biome. Proper health starts at the gut. So guess what? Go to my store, the-studio-reykjavik.com, get the probiotics that I have. I also have a veggie version that's not in stock right now. It should be in stock in about 2.5 weeks from now. But what I do have in stock is the powdered version. So please go to my store, the-studio-reykjavik.com. Use discount 5 to get $5 off any order. Just follow my lead. These are things that I take every day. And you're going to slow down the aging process and you're going to get healthy. You're going to be you're going to be amazed. You'd be amazed if you haven't been taking probiotics and you start taking probiotics, you're going to be amazed in just the energy levels. And you're going to be amazed at the health that it starts to produce for you. So get healthy, all right? You can do this. It's not that hard. So just follow my lead and get the high quality supplements that I have on my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos. All right, so let's listen to, I want to take a look at okay, this is CNBC's take when the read came out for the wholesale prices of 0.9% in July.
We're a couple seconds away, folks, from our July release of the Producer Price Index. Headline number is whoppingly big. Oh my goodness. Up 0.9%. Up 0.9. And if you strip out food and energy, guess what? It's still up 0.9. Boy, that equals June of 22. You're to March of 22 on the headline to find a bigger number. On the core number, that would come to March of 22, since we've had a number of that magnitude when it was 1.2%. These are kind of COVID distorted numbers. Now, let's look at ex-food, energy, and trade. Triple the expectations. All three of those were expected to be up 0.2. This is up 0.6. 0.6 would be the highest level since March of 22 when it was 0.9. Now, let's go year over year. These are warm too. 3.7, excuse me, I'm getting ahead of myself. Final demand year over year is 3.3. We're expecting 2.5. Now 3.3, that'll be the highest since February. The high water mark was January this year at 3.8. Now 2.8 is X food, energy, and trade. That is definitely higher than 2.5 expected. 2.8 will be the highest since March. And right in the middle there, we have X just food and energy. That number coming in at 3.7. I kept it for last because that really is a very, very large number. 3.7, well, that would be the largest since March when it was 3.9. So we see every single metric is warmer than expected. Every single metric is significantly higher sequentially. Now let's go to initial jobless claims. Here's a bit of good news, 224,000. That's down 3,000 from a slightly revised 227. And we're the 12th consecutive week above 1.9 million, and continuing claims, 1,953,000. Once again, it all gets stacked up pretty tight. What we're thinking about is these numbers go all the way back to November of 2021, and the next jump up from these numbers will be when we pop over 2 million. The last time we did that was, as I said, Nova 21, 2,041,000. So we saw interest rates move up to this kind of 4.25 level in 10s. The 2-year has moved up to a bit to 370, and every maturity now, except for 30-year bonds, are higher in yield. 30-year bonds are virtually unchanged. Next week on Wednesday, we get a 20-year, but you know, on the supply side, it's a bit in the rearview mirror. We didn't have terrific auctions, and I'm going to throw it back to you guys. I'm a little surprised the markets haven't moved more on it, but the knee jerk is usually against expectations. The residual trade down the road here today will be about how this factors into the bigger picture.
They told me to follow my dreams, but they didn't tell me there would be 600 hours of that. See, I couldn't.
Please go to my store, the-studio-reykjavik.com, and get ubiquinol. Ubiquinol is very important to take if you're 40 years of age or older. Ubiquinol is the most bioavailable form of CoQ10 that you can purchase. You can't buy anything better than what I have in my hand. Ubiquinol will soak up free radicals because it's an antioxidant. It's going to help with the mitochondrial health so you have more ATP. That's super important because when you start aging, guess what? You start to build up free radicals and your mitochondrial health goes down. You need to take ubiquinol to mitigate that. Also, ubiquinol helps the health of your neurons. You're going to know a lot of people within the next 5 years that are going to have early onset of dementia for a multitude of reasons. All right. Some of it is because of the crisis of 2020. Some of it is going to be lifestyle choices. But the point here is, guess what? It's going to happen. So you need to start protecting your neurons. And you need to do that by taking proper supplementation, filtering your water, eating properly, staying away from processed foods, staying away from sugary foods. You want to improve your cardiovascular health because you want better blood flow to your brain. My father died from ischemic dementia. He, I'll talk about that maybe in a different video. But the point here is that you're going to see a lot of people getting early onset of dementia. And I'm not talking about, that they're just in their geriatrics years. No, I'm saying that it's going to start, you're going to start seeing it with people that are in their 40s. So pay attention, it's going to happen. So you better start protecting your neurons. NAD+. NAD+ supplement will boost up those NAD+ levels. And by boosting up your NAD+ levels, you have more energy. NAD+ helps to repair DNA, your cellular DNA and your mitochondrial DNA, and NAD+ helps to protect neurons. So a great stack for neuroprotection is NAD+ and ubiquinol. Please go to my store. Make sure you take filtered water, but please go to my store and get these great supplements. Use discount 5, you get $5 off any order, and if you spend $100 or more, you do get a free gift until supplies last.
4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. We appreciate that. The inflation news front and center here for the markets here, as Charlie was just reporting. A little bit of red on the screen here. Let's take a look at some of the stocks that are on the move today. I'm Paul Sweeney alongside Lisa Mateo. We're joined by Bloomberg's Red Brown. Red, what are you looking at today?
Yeah, first on my radar today is Tapestry. They are the worst performing stock in the S&P 500 right now. That's the owner of Coach and Kate Spade. Shares are down around 17%. That's the steepest intraday drop since August of 2023. So that's really coming off the back.
This may be that price signal issue that I'm saying that maybe the consumers are starting to not buy. So if there's price increases, consumers aren't going to purchase and they're going to wait for sales. This is the point I'm making about Macy's.
So yeah, company has had a great year, up around 70% prior to today, but this kind of backs it down below the 50% range now for the year-to-date returns.
Man, it looks like Kate Spade was not doing well for them at all. Okay, let's go to the world's biggest farm machinery maker, Deere.
Yes, Deere, another one in the red this morning, another one due to the lowered full-year outlook for profits, is falling around 6% right now at the moment, was down around 8%, so pairing a little bit of the losses. It's the worst intraday move since earlier this year, since April, so around the time when we first got the tariffs announced. And that is still kind of a lingering issue for the company, but this time it's just impacting the way that farmers are buying machinery. There's just this kind of lower sentiment among farmers right now that is having them delay and be cautious around some of these bigger expenses for them. Add on that some of the pricing that's falling for.
Demand function is going down. The demand function is going down in the economy.
At the moment.
And that aligns with what we heard yesterday on this program. We spoke to Brian Hefty, who is a farmer in South Dakota, and we're talking to him just about the state of the farmer, and he says it's tough out there because crop prices are down, commodity prices are down, but his costs are rising. Fertilizer, labor costs, even the interest rates hurt because they're all indebted. So tough times out there for the American farmer. Hopefully commodity prices will turn around here. How about Cisco?
Yeah, Cisco, the big one for today. It is kind of flat at the moment. Shares were down around 4% at the open. The move comes after it offered its new fiscal year revenue guidance, looking around $60 billion at the high end for the full year. And some analysts were looking around for $61 billion. I think with any company that has mentioned that it will have some AI exposure, that becomes a little bit increased expectations, higher optimism. So this may be just disappointed slightly. Again, shares are kind of flat at the moment, so we'll see how this plays out. It did report that they had $1 billion in sales related to AI for last year. Maybe that's not enough for some people to kind of jump into the stock at the moment. Couple that with a little bit of concerns around how competitive the space is becoming with Broadcom, Hewlett-Packard, also kind of taking aim at the same markets, and maybe that has kind of dampened some of the optimism around Cisco.
All right, great stuff. Always appreciate getting your thoughts here on the earnings front. Red Brown, earnings reporter for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute radio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. PPI data today came in much hotter than expected. Initial jobless claims came in right in line with expected. But of course, it's all about inflation. It's all about how this inflation may impact what this Federal Reserve does. Let's check in with Enda Curran. He's a Bloomberg Global Economy reporter. And we've had a little bit of time to digest some of this PPI data. On a headline basis, it looks like producer prices came in much higher than expected. What's happening?
It was the highest 0.9% on month, which is the biggest increase in 3 years, as you're saying there, Paul. So on a headline basis, that's a big number. Under the bonnet, it's been driven by services. You have financial services margins pushing up that figure, probably reflecting the stock market boom. And on the other side, there's retail and wholesale margins. And this is where things get into the weeds pretty quickly. There are some views that perhaps that side of things is reflecting rising cost pressures linked to tariffs. Maybe those tariffs are starting to be passed on. So there's a little bit of something for everyone in this PPI reading. But I think the overall takeaway is that quite apart from yes on a headline basis, it's much stronger than expected. It also kind of leans into the idea that we don't yet know exactly how this tariff story is going to impact inflation. I've seen some economists say the Fed is correct to be holding on to this wait and see mode when you see a data set like this, because we don't yet have complete clarity. At the very least, we know there are price pressures from tariffs, no doubt about it. Economists are warning more is expected over the months ahead. But it's very much almost at this stage, take it 1 month at a time to try and get a clearer handle on this.
Yeah, and then can you break down that a little bit more? What about the extent to which companies can pass that burden from tariffs onto consumers?
Yeah, well, it's obviously, Lisa, it depends on the product, and it depends on their company margins and the sector. Broadly speaking, there have been, there are two camps on this. There's one camp that says, look, companies can absorb this in their margins. Either they're a seller on the other side of this trade can absorb some of it, and the company can absorb some of it. Margins have fattened, since the pandemic years due to inflation and everything else. There's that camp. And then there's a camp that's saying, no, companies can only absorb this for so long, and then they'll have to start passing it along to the end customers. And I think that's probably where we feel like we are in the debate at the moment. That some of this is starting to leak through. The question of how much it is passed on. And remember this argument that with inventories having been stocked up earlier in the year, as those inventories come down, companies have to restock at higher prices and pass on those costs, pass on those goods at a higher cost to consumers. So the thinking is this tariff inflation will surface in the months ahead. Now the White House, of course, pushes back strongly on that. They don't see any tariff inflation in these figures. But I think if those sitting in the middle of this debate say it's going to take a few more months yet to get clarity on the extent of how tariffs are affecting overall prices.
Yeah, so the question is, what percentage of these tariffs is being, eaten by companies, by exporters even, by importers, and then by consumers. And that's kind of where the analysis seems to be now. And of course, Goldman Sachs came out a couple of days ago and said, it's not too bad now for the consumer, but they think throughout the year and into next year, it's going to get increasingly difficult for consumers not to be paying higher prices. The president called out that report as he did not care for that report, did not support that. And we even spoke to Anna Wong from Bloomberg Economics just a moment ago, and she says she does not believe that it will be rising too much more for consumers. So we'll have to see how that plays out. And we also had initial jobless claims. I don't know, kind of came right in line with the expectations, it seems like. So it seems like the labor market's kind of hanging in there. Is that your take?
In line with expectations, I mean, I don't need to relitigate the debate now, the contentious debate about the state of labor market data. But again, there are two camps in this. There are those who say, look, labor data is clearly softening, as we saw with the revisions for the previous months in the non-farm payrolls, indicating a slowing economy. And then you have those saying, this could just reflect the immigration crackdown story, slowing population growth, slowing number of people entering the workforce, slower number of jobs being added, and they point to the fact that companies aren't necessarily letting off staff in a wholesale way, at least in terms of mass layoffs. So again, complicated debate. It's going to take a few more months to get a cleaner read on the jobs market.
And all this data, of course, playing into interest rates. So what kind of information in the last 20 seconds or so will the Fed cut rates?
Well, the market seems to be keen that they'll go 25 in September. We do have Fed Chairman Jerome Powell speaking next week at Jackson Hole. That'll be a big one to watch.
And thanks so much. Appreciate it. And occurring global economy reporter for.
All right. So the market update here is the S&P 500 is trading at 6,461. VIX is trading at 14.82. Euro is trading at 1.16. Oil is trading at 63.53. BITO is trading at 21.47. Bitcoin is trading at 118,960. Japanese yen is trading at 147.42. Natural gas is trading at 2.8. So let's go over some of the resistance points and the targets. So the S&P 500, I have a year-end target of 7,000 or 6,800, especially if the Federal Reserve lowers rates by a quarter point. So right now, if you're trading the S&P 500, you are going to probably see we're going to have a resistance point, a near-term resistance point at 6,500, and you're going to have a support level at 6,250. Now, BITO, which is for Bitcoin, BITO is a long ETF leveraged. The resistance that's trading at 21.49. So resistance level is 22.50 and support is at right now we're at the support level at 21.49. So if it breaks, if Bitcoin starts to go down, we're going to break that support level and we're going to have a new support level. Now, oil is trading at 63 handle. The trading range right now for oil is support level at 60, resistance level at 65. Now, I think what's happening with the oil market, because it was slightly elevated a couple of weeks ago, above the 65. I think what's happening is Trump is talking to the Saudis to actually bring down oil price to hurt Putin in the oil market, so he doesn't have as many funds to actually support the war in Ukraine. So I think this is tied to some geopolitical aspects to Ukraine here. Now, BOIL is an ETF for natural gas. Now, natural gas is trading at 2.82. So we're going to have a resistance level at 3, and we're going to have a support level at 2.814. And if that breaks, you're going to have another support level, major support level at about 2.5. Now that translates to BOIL is an ETF for trading natural gas. Oil is trading at oil is trading at 29.83. So the near term resistance level is at 30 and the support level is at 28. So that's the ranges for these different assets. Now, VIX is trading at 14. That's still really good. So equities are still going to go up. Even with this price issue with PPI, with the inflation issue. All right. Now with that, let's take a look at let's see if
Today, Ether continues creeping.
let's see if MSNBC has anything good about the inflation numbers. House majority. Mad dash. No, let's go to Bloomberg here.
And S&P down 9 now, but 64.57. Little change from a record, down 0.1%. The Dow is down 132, a decline there of 0.3%. Nasdaq Composite Index down 19, drop there of 0.1%.
I'm going to go to CNN about Putin.
Vladimir Putin voicing praise for the Trump administration's efforts to forge peace in Ukraine.
To tell you about the stage we are at with the current American administration, which, as everyone knows, is making, in my opinion, quite energetic and sincere efforts to stop the hostilities, stop the crisis, and reach agreements that are of interest to all parties involved in this conflict in order to create long-term conditions for peace between our countries and in Europe and in the world as a whole. If by the next stages we reach agreements in the area of control over strategic offensive weapons.
Meantime, Ukrainian President Volodymyr Zelensky is rallying European support, meeting today with British Prime Minister Keir Starmer in London. That coming amid a rush of diplomacy as European leaders present a united front heading into the Alaska summit. President Zelensky says they discussed security guarantees in detail, a key issue in getting Ukraine to agree to a ceasefire. And a senior Putin aide today shared some details about the summit, which will be held at a U.S. military base in Anchorage, Alaska. He says it will start at 11:30 a.m. local time, that's 3:30 p.m. in Washington, and 10:30 p.m. in Moscow. after one-on-one talks with the help of interpreters. He says the two presidents will hold a joint news conference. He also says both delegations will have 5 members with groups of experts nearby. We're joined by Sebastian here in London and Nick Walsh is joining us live from Kyiv. So Nick, to you first, just in response to what we heard from Vladimir Putin then, can you tell us what you can unwrap from those comments as we look ahead to the summit this Friday?
Yeah, it did appear that some of the worst fears potentially of European leaders and certainly Ukraine about what this summit may evolve into are potentially being realised, certainly in how Putin is framing this bilateral meeting. Talking about a strategic weapons treaty, it doesn't say the word nuclear, but most treaties refer to that kind of weapon or nuclear-capable missiles, and really, I think, focusing the discussion on what Trump can get out of improving relationships with Russia. Can there be a US-Russian strategic deal in all of this? Playing on the, some might say, misconception within Trump's inner circle that somehow Russia, utterly dependent on China to bankroll its war, can somehow be prized away from Beijing and moved into the American orbit almost as an ally against China. That was a misconception that most, I think, felt would be laid to rest months ago after Trump got increasingly disappointed with Putin. But Putin does appear to think that this summit is much more about bilateral relations. Yes, he talked about the energy being put into trying to find a solution to the Ukraine conflict, which he started. But it is clear too also that in those simple words that he may well be trying to throw at Trump in that meeting something, not of a red herring. Obviously, the world is interested in seeing a lesser threat of strategic weapons being used by either the United States or Russia. But that wasn't initially the point of this Alaska meeting. That was the war in Ukraine. And so while it's entirely impossible, frankly, to predict how this meeting will go, and Trump appears to, when he speaks to his European allies, emerge tough, talking about very serious consequences yesterday, apparently, according to the German Chancellor Friedrich Merz, saying he won't be negotiating away Ukraine's territory. That's for Ukraine to do. Merz also talked about how serious decisions can be made at that meeting. So I think there's no doubt in the minds of Europeans what they want him to enter into that meeting, thinking, or either that there could be some potentially unpleasant surprises between those two sides meeting without Europeans or Ukrainians in the room. And so Zelensky in Downing Street to again have another audience or feel amplified his concerns, for Europe to amplify their concerns again. It's all been pretty consistent, frankly. Ceasefire first, negotiations around the frozen front lines as they currently stand. No suggestion that either side would be happy to give up territory at all. It seems, to be honest, mostly far-fetched. But that has been translated to Trump. Quite whether it gets echoed in that meeting with Putin is really unclear. Trump's called it a listening exercise. It feels at this stage like he's ultimately going to see what Putin's willing to offer. If he likes it, he'll pursue it. And that somehow takes US agency out of these discussions.
Yeah. Nick, thank you. Turning to Claire Sebastian. Claire, as we look at those images of the Prime Minister meeting with Zelensky this morning, you were there actually outside 10 Downing Street as that happened. The Prime Minister issued a statement afterwards. Do we know what has come from that meeting?
Well, look, Christina, this was, I think, just as much about optics as it was about substance. It was a way to sort of follow up not only on the big meeting that we saw yesterday between European leaders involving also Zelensky and Trump, their last best chance really to get into Trump's ear ahead of the Alaska summit, but also to follow up on the big show of solidarity and support for Ukraine that we've seen from Europe this week. And I think the image of the two leaders, you see it there, sitting in the garden at Downing Street drinking tea, and the sunflowers, a potent symbol of Ukraine, between them really gives across that image. In terms of the statements that came out of it from both sides, I think we see the optimism that we saw come out of yesterday's meeting now heavily caveated. Keir Starmer, the British Prime Minister, saying that the talks present a viable chance to make progress as long as, he said, Putin takes action to prove he is serious about peace. Similar tone from Zelensky, saying that they discussed in detail security guarantees that could make peace sustainable, but only if the United States manages to pressure Russia into stopping the killings and engaging in genuine, meaningful diplomacy. I can tell you, watching President Zelensky walk into Downing Street this morning, it was a very serious, very sober demeanor that he struck, despite the warm greeting that he got from Keir Starmer. He has been warning throughout this week that Russia will seek to manipulate and to deceive, in his words, the United States. I think that fear very much remains, and I think for both Europe and Ukraine, at this point, the sense is that they really have done everything they can to try to influence this meeting, and they now have to watch and wait, and of course, make plans for what happens after Alaska, depending, of course, on whether that meeting is judged by Trump to have gone well or not. Christina.
Yeah, a lot of wait and see right now. Claire Sebastian and Nick Pitmore, thank you to you both.
These glasses are not a toy. Nobody believed me at first, but
let's bring in our panel, the great Brian Kilmeade, host of One Nation, co-host of Fox and Friends. Well, wait, what One Nation, that's the one. And what about the radio show?
Yeah, Brian Kilmeade show on the radio. You love doing this show.
I love doing
Donald Trump is on tomorrow.
Whatever Brian does, I love to do. And Caroline Downey, National Review, staff, writer, all good. Brian, let's start with the war. So I guess this phone call with the EU, conference call with the EU, what I gather is there'll be no territorial decisions with Putin. The main thing Trump wants is a ceasefire. But as Alexandria Hoff mentioned, I mean, no other breakthroughs. And then it says there'll be consequences if the meeting goes south. But I'm just not sure what any of that means, to be honest.
Well, a couple of things. I love this. There's going to be consequences. So if Vladimir Putin shows up and says, my demands haven't changed. No EU, no NATO, the battle lines stay the same, and you can't have an army, can't have police force, and have elections. If that's the same, Trump's going to walk out and go, I just wasted my time, and they're going to be hit with those Senate sanctions or something that look like that. I got it. But what he said was so good. He was, I'm getting this started. The next step, and I want it to be right away, will be with Zelensky, and if they want me there, I'll go. So what he's trying to say is, I'm trying to make something happen. If he doesn't come to play, there'll be ramifications, but don't look at me.
Okay, I'm trying to follow this very carefully. We know Putin wants to keep the territories in eastern Ukraine. Right? He didn't get what he hoped for. He didn't sweep through Ukraine. He didn't win over Kyiv. But he's got these territories. He still has the Crimea going back many years. Do you think Trump will give him those territories at some point, and in return for what?
Well, I hope not, because I think that would be a pretty significant capitulation. I think what Putin has proven, Larry, is that he's very deceptive. He's misguided Trump this entire time. And I think Trump needs to follow his own advice from the art of the deal, which is know when to walk away from the table. And I also think we have to look at the long run. NATO specifically, I think NATO is going to continue to be a very powerful deterrent to Russian aggression, because I think Russia's goals are beyond just some of the territories that maybe have been conquered in this war, or wrongfully taken over, but it's the former Soviet Empire. I do think Putin still wants some of those old Soviet states, and I think that is his long-term ambition. And it's important that Trump remembers that.
Can anybody, in all honesty, you're negotiating with Vladimir Putin. Is it possible to believe anything he says at any time?
Well, I want to know how good the intelligence is to show you how desperate he is economically. Because how desperate is it that you need North Koreans to work in your factory? How desperate are you to beg Yemenis to go fight for you and North Koreans to go fight for you? How bad do you have to be off to say, hey, North Korea, I'll give you satellite stuff if you could just give me bullets, and say, hey, we're going to pay for a copyright for drones from Iran. My goodness, these are third world countries. They're a first world country. They're a first world army. We thought the best army, and they've been nothing but humiliated. They just don't tell their people that. The information hasn't gotten to their people of 150 million that die in society. So maybe he told Witkoff, and you would know, Witkoff, hey, I'm looking to talk. Can you set something up?
He loves to talk.
Because
he loves to talk. That's his hope. But loves to talk.
I don't think Trump's being deceived. I don't think Trump's being deceived. Because he said it. Because this guy's tapping me along. Trump is saying it. So if he does it again, there's going to be hell to pay.
Well, oil prices are slipping lower, so that is an interesting thing. That says something positive might come from this. Let's have some more fun on this, though. We'll get out of the Ukraine-Russia war zone. The Texas legislative and gubernatorial Republicans are beating the goofy Democrats. They could pick up 5 or 6 new seats in the House, Caroline Downey. Politics. 5 or 6 seats in the House for Mike Johnson. That'd be a hell of a win.
Sure would be. And I also think it's so ironic how the Democrats were kicking and screaming and doing all this fanfare by going to Illinois to protest the partisan gerrymandering.
It's a perfectly dreadful place, isn't it?
It certainly is, but also Governor Pritzker signed a law that allowed for Democratic redistricting, which allowed the Republicans to lose seats, the Democrats to gain seats. So, I mean, they should really have a hypocrisy check anytime they're going to do a big PR stunt to another state like Illinois. This is just politics, and they can't pretend that they have some moral high ground here, because they would have done the exact same thing, and they have many times.
Caroline, I think the other thing that brought up is the interesting standoff with Gavin Newsom, because he said, hey, Mr. President, in his own Trump-esque way, you better tell Texas to back off, or I'm going to get a referendum, and I'm going to redistrict. And you know, Governor Abbott jumped in and said, you do that, I'm going to change 5 seats to 10 seats. And I got much more maneuverability. And you know, DeSantis is not shy. He's going to say, Florida's gotten pretty red. I don't think we're properly represented in the House. I think I'm going to start drawing some new lines. And he's got a pretty cooperative legislature.
Which reminds me, not only the Democrats losing all these battles, but the most important Democrat all summer long is, wait for it, Mondami. Mondami the commie, as some people like to call him. He's the most important Democrat. And I'm prepared to say that for that reason, the rest of the country looks at this guy and realizes what he stands for: anti-Semitism, hates Israel, high taxes, defund the police, and so forth and so on. He's the tip of the Democratic spear. This is driving people to the Republican Party. I think it's driving up the stock market because Trumpian pro-growth policies are going to stay in place. Mondami is the leading Democrat in the country now.
It's pretty bleak, Larry, and business leaders are alerted to Mondami's policies, as they should be. And I think the key thing here is that he's popular in New York City among elites, the young elites that feel disenfranchised. It's actually my demographic. We are graduates from college. We feel like we're not going to achieve what our parents did. Home ownership might not be attainable. And so we feel like Mondani and socialism is our ticket to success.
Last word.
My last word is this. Meta workers, Google workers are also his leading donors. So you're right. He rediscovered a political constituency. I think that he does have talent, though. He can speak.
He's fabulous.
Right. So that's just it.
He's so good that he's going to increase Republican majorities all across the country.
Unintentionally.
That's why he's so fabulous now. I think he's
falling in love with him.
He's contributing 1,000 points to the Dow Jones this summer alone. Caroline Downey and Brian Kilmeade.
I'll tell you, Mondami is scary because there's especially with the youth, there is this desire to gravitate to socialism. But eventually, when they, start realizing it's more costly to be socialistic than having a free market, then they're gonna go back to free markets. Please go to my store, the-studio-reykjavik.com, and get Clarity Factor. Clarity Factor will help you focus on tasks, either at work or at home or in school. Super important to take every day. It helps support memory. Now, drink it with filtered water, and what you'll notice is that you're going to be able to concentrate. It'll get rid of that brain fog, and over time, the neuroplasticity will improve. That means you're going to be thinking faster, and your memory will be better. So take Clarity Factor as part of that NeuroStack. And again, this stacks really well with NAD Plus and ubiquinol. But it also stacks really well with the following items: vitamin C and magnesium. Vitamin C helps with your skin. Vitamin C and magnesium helps with your immune system. And magnesium is really important for the efficacy of vitamin D3 and for brain function. Magnesium and zinc, super important for immune system and brain function. Take them together, drink it with filtered water, and it stacks really well with Clarity Factor. So go to my store, the-studio-reykjavik.com, get the magnesium and zinc, vitamin C and magnesium, and the Clarity Factor, and that's a great NeuroStack. Plus, you're helping your immune system. So please go to my store and get those items. I also have deodorants that are dual purpose to help to detoxify your body, and you use it as a deodorant. For males and females, you can get it in peppermint, lavender, and tea tree, and in citrus. Has no aluminum, no baking soda, made from essential oils from the Himalayas. Very high quality ingredients. So go to my store, get a couple bars for your household, and use the deodorants to help detoxify your body. And detoxifying your body is super important. I also have structural nano silver toothpaste. Whitens your teeth, freshens your breath, helps with the health of the gum line, and reduces inflammation at the gum line. With good oral hygiene, you're actually helping not just your oral cavity and the health of your teeth and your gums, but you're reducing problems with vascular and valvular issues. So a lot of people don't realize that when you start to get into your geriatric years and you have poor oral hygiene, it actually can affect your vascular system and your valves in your heart. So it's important to have good oral hygiene. Not just that, having good oral hygiene increases the probability of you maintaining your teeth. When you start to lose teeth, what will happen, and you don't replace them with an implant, what will happen is that the bone will start to weaken. And when it starts to weaken, you start to have further teeth loss, and eventually your bone density in your jaw is going to decline. If you notice that people are older and they don't have teeth, you start seeing that their actual jaw the jawbone is actually smaller. The reason why this is happening is that when a tooth is removed, there's no pressure. When you're biting down, right, there's pressure on all the teeth. You have all your teeth, there's pressure clamping down on all the teeth, the upper teeth and the lower teeth. But if you have a missing tooth, what will happen is that there's no pressure, and so the upper tooth will start to weaken, and then the lower area, adjacent teeth where the missing tooth was, will start to weaken too, because the clamping pressure is less. And then over time, when more teeth start to fall out, you start to have a declining density of the jawbone. So please go to my store. It's really important to have good oral hygiene. So get this structural nano silver toothpaste. Get a few tubes of this for your household. It is the best toothpaste that you can get. There's nothing better than this. So please go to my store, get the toothpaste and the other items. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last.
He told us look out for the Amazon effect on tomorrow morning's numbers.
We know that the government tries to seasonally adjust these, and if Amazon suddenly decides they're going to extend Prime Day, and Target and Walmart are going to have their own specials, that will probably distort those numbers. And so it could actually be artificially high just because of these seasonal adjustment factors.
Brian Jacobson of Annex Wealth Management interviewed moments ago right here on Bloomberg Intelligence. Amazon shares, they're advancing now by 2%. Again, recapping, S&P 500 index now swinging between gains and losses, down now by 1 point little change. For on-demand news,
that was the reason why I'm saying that the demand curve is shifting for products and services. Maybe not in vacationing, I don't know. I think it is. So I don't understand why airlines and hotels are more expensive. But there's other discretionary items, that demand function is declining. So to the savvy shopper is going to be looking more towards sales, more towards these Amazon Prime days and, 60% off days, on these big box stores. So the savviness of the consumer is such that I'm not so sure that you're going to get a full dissipation, a full projection of tariffs into the actual CPI, the consumer price index, because of the savviness, because they're going to be always looking for that sale. So it's not going to translate into the consumer that much. They may want it. The original retail price may try to transmit 2/3 of the tariff, like this Goldman Sachs guy was saying earlier on CNBC. But I have a feeling that the savviness and the competitiveness of certain products, that the consumer is going to go to the lower price point. And therefore, it's not going to translate into, the tariffs aren't going to translate 2/3 into the consumer price, because they're always looking for the sale. Okay. Let's see here. All right, let's listen to CNBC. They're readjusting their cuts for the Federal Reserve.
Ready to lose the hat and regrow the hair? With Sprays by Hims, you can regain your hair and your confidence. Our sprays are powered by clinically proven ingredients like minoxidil and finasteride, so you can grow thicker, fuller hair.
So I think the question is, are there market ramifications for this PPI report? We saw kind of, I'm going to say it was a mixed CPI, by the way. Everybody says it was a better than expected, but headline was better than expected. Core was a bit hotter. I just think people feared even worse than that. But are there market implications when it comes to this PPI report? Can it change the outlook when it comes to rate cuts? If you look at the CME FedWatch tool, it's 96% chance odds of a 25 basis point cut and 4% of a 50 basis point cut. So people seem very locked in on the Fed's going to cut.
They are locked in, but if you look at the trend of those expectations, we started the year thinking they were going to cut 3 times. So, I think that we have had to readjust our expectations for Fed cuts for the year, bringing them down to 2, and then eventually down to just 1 cut for the year. And I think that tells you that these numbers that you're seeing in CPI, PPI, and likely core PCE will reflect the same slightly hotter number than is expected. I think all of that reinforces the fact that, we are seeing some inflation pressure, and the Fed can't necessarily sort of cut haphazardly with that.
So I think I want to go back to my original question. If we get a hotter than expected PPI, or even in line, because PPI is expected to show an uptick, does that change the view on rate cuts, and does that change some of the momentum in the market?
Yeah, well, it's going to change.
Yeah, I think it has to. I think that the Fed has been very clear that they were going to be data driven, and so if you get data that doesn't support a cut right now, then you could see that cut continue to get pushed out. And the one question is what happens with consumption and the weakness in the economy, which has been sort of boiling under the current, but we haven't necessarily seen evidence of that yet. I think that could change.
So you have this PPI going up, you have consumer price slightly going up, but you have this demand function of the consumer that seems to be teetering. Unemployment is still at 4.2%. So what's the reason for the demand destruction? Why does it seem as though the curve now is it that they're worried about AI and their jobs are going to be taken away? Are they worried that if they do lose their job, they won't be rehired because of AI and because of potentially a recession around the corner? Maybe. I don't think there will be, but I think that things will be good until around the corner of 2026. When we're transitioning from 2026 to 2027, I think is a problematic time period that we have to worry about. But from now through 2026, I don't think it's going to be I think it'll be actually good, at least for the stock market. And then it'll muddle along for the regular economy. But so you have these price increases slightly. All right. But more concerning is the actual demand function for products. That seems to be faltering a little bit. Now, if the Federal Reserve is looking at that, if that demand falls too fast, they're going to cut rates, even if unemployment is below 5%. But they're sandwiched into this two conflicting things. The demand function seems to be falling. So Trump is saying cut rates, which he's right about that. in terms of just that variable, the demand function. But the inflation function at the wholesale level is elevated. We still have a projected inflation annualized number above 3%. So the Federal Reserve, if they cut rates, it could be inflationary, even though your demand function is starting to go down, right? So it's not really a simple as just cut rates, because if you do cut rates and there is this inflationary aspect to it of PPI coming into CPI, then it may cause more demand destruction, even though you try to lower rates. So you do something, you lower rates, trying to help the demand for consumers to spend, but then inflation starts to continue to creep up. The demand function continues to go down, and the Federal Reserve just put gasoline on a fire. And now inflation starts to go up, demand starts to continue to go down. So this is the reason why I keep on saying that the Federal Reserve made the biggest mistake in 2023. And in 2022, they didn't see the inflation, so they thought it was transitory. And when they did notice that the inflation wasn't transitory under Biden's administration, they didn't do shock therapy. If they did shock therapy back then, we would not have the problem that we have today.
Picture. But if we see just inflation with no kind of significant weakness, we have to readjust those expectations.
All right. What's your view on some of the, I'm going to call it exuberance or excitement in the market right now? We saw that bullish IPO yesterday. That really surged. We see cryptocurrency hitting a new record, Bitcoin in particular hitting a new record high. Also, Ether making some big upside moves. And we also highlighted this earlier, the SPHB ETF. We use that to kind of track interest in high beta stocks, people just kind of looking at some of the most market sensitive companies and investing in those. What does that say to you, the fact that we're seeing all those upside moves in those, what I would say are riskier areas?
Yeah, this is such a frothy market. I agree that all the evidence of froth is clearly there. And, I think that the market's broadening out is maybe a good sign. Because it's been such a tiny segment of the market has been driving most of the returns all year, which makes actually the market somewhat fragile.
The market can be frothy for a while. If the Federal Reserve lowers rates, which they probably will do because the demand curve function is probably going to be shifted or it's declining. So they want to boost consumer spending. So they're going to probably lower it by a quarter basis point. That will be an accelerant for the market. And then you're probably going to see a 6,800 or higher S&P 500 at year end. Now, if the demand keeps on going down, then you're talking about now we're going to be consolidating at this level at 6,500 for a little while. But I don't think that's going to happen. I still have the target of 6,800 to 7,000 for the S&P 500.
The outlook then of the markets is not one that's diversified across 500 stocks, but really focused on 7. And so I see a lot of downside for the markets, but the momentum is continuing. And the problem with momentum and sentiment is it can turn and shift at any point. And right now we haven't seen the catalyst, but this is a market that is just walking along a knife edge.
So with that in mind, we know
I agree with her on that. I think it is walking on a knife edge. I think there is walking on a knife edge. But because the question is how much will the tariffs really get pushed into the real economy? I don't think that much. And this demand function, I think, is more worrisome. The question is, why is the demand function teetering? Is it job worry? Is it AI worry? Is it the consumer is over in debt? Is it because of students are now paying their loans off? what are the variables that are driving this demand function that seems to be a little bit on that edge? Now, when we go into the holiday season, if the sales are good, then bam, the S&P 500 is going to go up. All right. But if sales are poor or less than expected in the season, during the holiday season, then we're going to have that consolidation of the S&P 500. And we won't hit that target of 6,800 or 7,000.
Alaska later this week. So are there actual market implications there? Like when you look at the Russian economy, it doesn't really impact the U.S. economy. Companies have already pulled out of there, so that Band-Aid's been pulled off. But is there a chance this could impact sentiment maybe to the downside?
You know, in theory, it shouldn't. There's really no kind of reason from a fundamental perspective that this should matter. Russia does not matter dramatically to the global economy. But I think a lot of what we have right now is a question of confidence. Confidence in, confidence in data, confidence in everything. I don't think that there's anything that could come out of this Russia meeting that should matter. But I think that the markets are questioning whether or not we are going to continue to have the data and the policy perspective and commitment to solid and functioning markets and data that we can use to accurately forecast what is happening in the economy and what could happen to earnings. I think that's the big question right now that's in the markets, and that's something that could really undermine confidence and take out that sentiment, which is the last thing that's been holding up the market so far.
Please go to my store, the-studio-reykjavik.com, and get the gels. I have it in a tube form and a quick dispenser form. Make sure that you have some at work, at home. You never know when you need it. It's dual purpose. You can put it on your skin as a daily skincare. You can use it as an aftershave. You can use it on a wound to help heal the wound. If you're not feeling well or someone around you is not feeling well, it behooves you to use this. Put it on your hands, around your mouth, around your nose, around your eyes, lightly coat your nostrils. Guess what? It stays active for 5.5 hours. Very high quality. Go to my store, the-studio-reykjavik.com, and get the gel. Also, we're going to be going into that wonderful cold season. So it behooves you to get lozenges and drops. Because if you start getting that throat irritation, you want to mitigate it right away. Elderberry zinc is in stock. I have 21 in each bag. Get a few bags for your household. Very high quality. And I also have drops, which are smaller. You get it in a 100 count for each bag. You can get it in cherry, honey and lemon, and also in blueberry. So please go to my store, the-studio-reykjavik.com, and get a few bags for your household. Be prepared. You want to be prepared, because if you mitigate it right away, guess what? It's not going to be as bad. Now, if you have a somewhat mild cold 3 times a year, and it's, lasts for 5 days or a week, and it's just mild, and you have that 3 times a year, guess what? It takes 2 weeks to heal. So basically 9 weeks out of the year, your body is either sick or healing from the sickness. And that's just mild. It would take longer if it's more problematic. So this is the reason why if you start seeing people that are always getting that seasonal allergy or seasonal cold, they age faster because it takes energy out of the body to remodel, and the immune system isn't robust. Because if you're chronically sick, right, your immune system is down. So this is the reason why you can see that certain moments in time when something's happening, that they have this jump in aging. Well, I just told you. It behooves you to be prepared. So make sure you get the lozenges and the drops. Have some at work and at home. You never know when you need it. Take them right away if you get that throat irritation. And I suspect a lot of people are going to get something called razor throat in the fall and into the winter. I have a feeling on this. So just be prepared, okay?
Access to preferential funding, they're somewhat insulated from the federal bankruptcy,
Right.
and they've had really high levels of domestic demand to service.
Tony, thanks so much for your reporting. Really appreciate it. Tony Halpin, team leader for Russian economy and government coverage for Bloomberg News. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news.
All right, let's take a look at China's new social security ruling. All right, let's listen in on this about China.
You need to meet surging content demands without compromising your business or your brand. With Adobe Express, your global teams across marketing, sales, HR, and more can better engage their audiences and get to market faster. And hey, who doesn't like fast?
All right, time for our Trending in China segment. And really a hot topic that's circulating in social media here right now is a ruling by China's highest court has made it impossible for workers and their employers to waive social insurance contributions. And that's triggered a broader discussion about inequalities in the welfare system.
Yeah, let's bring in our China correspondent here with the story that's really making waves across. Social insurance is already mandatory, but what's changed, I think, is that what people might be wondering right now.
Yeah, so what's changed is that the highest court has now handed down this ruling that says that if an employee terminates a work contract because the employer is not paying social insurance, the employer now has to pay financial compensation. So what this means is that it makes it virtually impossible for employers and employees to come to informal agreements to waive the social insurance payments, which, even though it's mandatory, has been extremely widespread. There was a survey last year of 6,000 firms that was conducted by an HR services firm called Zhonghe Group, which found that less than 30% of companies were fully compliant with paying social insurance. So on social media now, people are up in arms because a lot of people actually voluntarily want to waive the payment because they want to take home more pay, and of course it's a cost savings for companies as well. And so there are concerns now about whether or not companies, especially small and mid-sized firms, would survive. And you can see here someone is saying, the money I pay now is taken by the elderly, but if no one is having children, who's going to pay my social insurance to support me? So there's the idea that your money is going to support someone else and there's none left for you. And there's concern about okay, this is going to be bad for small businesses. People are going to lose their jobs. And there's also this idea that the social insurance is not very equal as well, because there are estimates that state-owned employees get about twice the amount of payouts compared to private firms employees, and at the same time rural residents get less than a tenth of what urban residents in private firms get. So some people just feel that they don't want to pay into a system that is quite broken.
Okay. There's also fears that the whole aging population is putting a strain on the pension system. I mean, do you see this as having any impact on the economy?
Yeah, it's a very legitimate concern because there is an aging population. 20 million people are going to retire every year over the next decade, and there are fewer and fewer births. That is, fewer people going into the workforce to contribute to this pool of money. So the Chinese Academy of Social Sciences back in 2019 already forecast that the state pension system could run out of money by 2035. Of course, it's possible that Beijing could intervene by, dipping into state funds to top up the pension system. But at the same time, right now, this new ruling, it's not clear the scale of the impact in terms of job cuts and wage cuts. But economists from SocGen, for example, are saying that if the impact is huge, it's possible the government may revise the policy later on, perhaps by delaying the implementation of this or creating some easing measures to help support companies to bear the burden and the financial cost of paying the social insurance payments.
He needs a bigger family.
Alrighty, let's see here. Let's go back to Bloomberg.
Also down today, currently down about 7.7%. This is the worst intraday drop since May 2022. Also an earnings mover, the company paired its full year earnings outlook. They said that lower grain prices are curbing farmers' spending. They also pointed out that tariffs ate into profits, and so seeing a negative impact there to the American farmer from the tariffs.
Yeah, and again, yesterday on Bloomberg Intelligence program, we spoke to a farmer out in South Dakota, and when I asked him, how's the farmer doing, he says, it's tough out here. Commodity prices are down, so the prices for their crops are down, yet their costs are up, and he cited higher seed costs, higher labor costs, and higher interest rates, which is a drain for those folks who take on a lot of debt, which farmers tend to do, and fertilizer costs are up. So tough out there right now for the U.S. farmer. Hopefully it gets better, but we see that a little bit in the year results. Tapestry.
Yeah, last one we're looking at. So Tapestry, ticker TPR. This is the owner of Coach and Kate Spade, so your luxury handbags. It's down 14% right now, on track for the worst drop since April of this year. Its annual outlook just missed analyst forecasts. They also cited tariffs, saying that they're not seeing as much demand because of that. This also sort of signaled that Wall Street is maybe not factoring in tariffs as much to their sort of outlooks for Tapestry. So I think we might see a little bit of an adjustment of analysts' estimates for this company going forward.
So what's up with Kate Spade? Oh, I like Kate Spade.
It's all about Coach lately. I mean, they said that on their call that they're seeing really strong demand for these handbags. I think you can see that on the street, right?
I do have a Coach bag, but I don't have the Kate
I don't see exactly. So I think it's just sort of the brand that's resonating, right now.
All right.
You put Labubu's on a Coach, not on a Kate Spade.
Oh, that's how you do it. It's all about the bag chains too.
Yep.
That's it.
All right, thank you so much, Carmen Reineke. She covers all the equities for Bloomberg News. We appreciate that. Bitcoin retreats from record highs after markets get volatility jolt. I'm looking at Bitcoin here. It's 118,750, down about 3.4%. But in the last 24 hours, it did hit 124,000. So it is. You're going to cut rates. You're going to have the animal spirits like maybe yesterday. You buy the Bitcoin, and today you see the PPI data. You get a little nervous, maybe you pull back. That's called volatility. That's called crypto. That's called Bitcoin. Mike McClone lives it. Senior commodity strategist for Bloomberg Intelligence. Mike, did I just call that kind of correctly for Bitcoin?
Yes, I think you're right, Paul. The key thing to remember about Bitcoin is probably going to do well as long as the U.S. stock market keeps going up. And so far, that's the case this year now. It's backing off from record highs. It's becoming highly, I would say, leveraged at these levels. It's normal for that, and it's normal for high volatility. And right now, we're seeing a lot of pile-on speculation. But on the year, for a while, it was up about 30%. Gold's up about 30%. The stock market's up about 10%. Typically, Bitcoin trades about 2 to 3 times the volatility of the stock market, so it should be up about 30% if the stock market's up 10%. But the thing is, it's a highly volatile risk asset, new store of value that's got a very high correlation to the stock market versus gold, which is known as negative or zero, basically zero correlation to the stock market doing well. So I'm concerned that it's signaling there's a bit of a risk going on in the market. Also, remember, it's August. And the VIX yesterday dropped to 14.5, the lowest on the year. Then VIX picks up a little bit. We get back to some normal volatility. Bitcoin might be the first indicator to suffer.
Hey, Mike, you got to explain this for me. So what exactly is Bitcoin? Is it a commodity? Is it a currency? Is it a speculative asset? How would you categorize it?
I think it's all the above. Digital gold is where I started getting really bullish with Bitcoin back, 5-6 years ago. But now I find it just a highly speculative digital assets. The good thing to remember about Bitcoin is in 2009, there was one cryptocurrency. Now, according to CoinMarketCap.com, there's 19 million of them. So there's unlimited supply of these things. The key thing that's really been notable and delightful to see the Trump administration tilt from an antagonist to really understanding, well, this space is going to the dollar for its base layer, i.e. stablecoins or crypto dollars. They're pushing almost 300 billion now, and they all invest in treasury. So the technology is awesome. Tokenization is awesome. That's happening. But the key thing is we're in that speculative frenzy now, and it's highly related to the stock market. I think with one key fact, like I mentioned, there's unlimited supply of cryptocurrencies, and there's only 4 precious metals: gold, silver, platinum, and palladium. So I'm still kind of sticking with the rock this year.
All right. So, what ongoing role are ETFs, Bitcoin ETFs, playing in the price performance of Bitcoin these days, do you think?
I guess they're just really a lot of income, a lot of demand, a lot of inflows, but a lot of it's just kind of catch up. Because remember, we've been waiting for these ETFs for 10 years. When we launched that big Bloomberg Galaxy Crypto Index in 2018, the idea was someday it's going to be tracked by ETFs, an index to track the space, not just one, not just picking a winner. So massive inflows. The problem is, Paul, they're all expecting returns to be as good as they were in the past. And they're expecting the Bitcoin to beat the stock market, which it has. The key risk is it's basically leveraged stock market. So the stock market goes up, Bitcoin should go up more. The problem is now it's becoming mature, volatility is declining, everybody's piling on. Have we seen this before? It reminds me of 1999 in internet stocks.
Oh boy, I was there.
You were there, been there, done that. So you mentioned volatility, Mike. So how does Bitcoin volatility compare to traditional commodities? I mean, does that change how investors treat it?
Well, I always compare it to gold. So the Bitcoin to gold ratio, the ounces of Bitcoin, ounces of gold equal to 1 Bitcoin. Right now it's about 35 ounces. That's the same as when it first peaked in 2021. So that leading indicator has been flat for a while. It's a bit worried. And Bitcoin typically trades about 3 times the volatility of gold. So that's what I really compare it to. And so the thing is, they're negatively correlated, but also it's been a good leading indicator. The thing is, it's been stalled and lagging for a while, that Bitcoin to gold ratio. So I'm concerned it's telling us there's going to be a problem. So as we tilt towards the end of the year, this Bitcoin gold ratio needs to go up, or it's telling us there's a problem that is more likely to go down. And that's why I point out the volatility this low in the stock market and on a record high, Bitcoin to gold, I think, is a good leading indicator. For now, I'm worried. That's why I'm sticking with gold versus Bitcoin this year.
Hey, Mike, we heard from Deere today, and they called out that the U.S. farmers were a bit challenged there with the economics of the business. Yesterday, on this program, we spoke to a farmer in South Dakota who's got 3,500 acres, and he's got a big seed business, and he said the same thing. He said, crop prices down, and his costs are higher, really putting a dent on profitability here. How do you view kind of the U.S. farmer these days, and what's the outlook, you think?
Well, you nailed it, Paul. Right now, it's the first thing to remember, superabundance is a wonderful thing. The only way for farmers really to get out of this price decline is to create more and more crops. Right now, at 189 bushels, the latest estimate of U.S. corn production this year per acre, that's the highest ever. It's just the technology is bringing on, and we're bringing on so much supply, it's pressuring prices. Yep. The key question is where the prices bottom. I think corn's more likely to get down to $3 a bushel and stay above $5. It has to get to that low price cure, but it's not alone. Crude oil's doing the same, natural gas is some in there, the grains are all in there, so they're all heading for those low price cures.
Mike, great stuff as always. Appreciate getting a few minutes of your time. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. He grew up on a farm in Illinois. He was back on the farm earlier this summer. So not only does he trade these commodities historically in Chicago and various other pits, but now he writes about them from a research perspective, but he lived it back in the day here. So he's gone from doing corn and soybeans to Bitcoin. I mean, somehow he's evolved.
How do you make that transition? I have no idea.
Yeah, I mean, and you can talk cattle, pigs, anything with him. I occasionally will do a pork belly special, a segment on pork bellies. But we'll see about that. Coming up in just a moment, Chuck Roberts, he's the CEO of Cisco. He's going to be speaking with Bloomberg Television anchors Ed Ludlow and Caroline. Hi. Cisco had their quarter yesterday. I thought it was a good quarter stock. Kind of hanging in there, not really doing too much here today. But as Wu Jin Ho told us earlier, it's all about trying to get a piece of that AI expenditure, and they've been growing their business. But let's go to this discussion right now. In progress, Chuck Roberts, Cisco CEO.
Cisco CEO, Chuck Robbins. And actually, Chuck, I'm going to ask you something that I felt like the analyst community didn't really get to. And that is that there is this big product refresh happening, near-term over coming years. And I feel like you've been trying to talk about Cisco as a platform offering for a while. And if we look at that fiscal 26 outlook, is that baked into that, where Cisco is a platform offering and you folded security into it? That's kind of...
Please go to my store, the-studio-reykjavik.com, and get the collagen. Collagen is a dual-purpose supplement. It'll help with your musculature, your bone density, your joint health, your skin, your hair, your nails. Take it every day, super important. Also, take turmeric, ashwagandha, and lignans. Why? Because it'll help to boost up your immune system and your help with your cardiovascular health. Turmeric will soak up free radicals and bring down inflammation. Ashwagandha root will help to control your cortisol levels and your blood glucose levels. And lignans will bring down inflammation and soak up free radicals that'll help with the immune system and your endocrine system. Take them together, and what will happen is by bringing down inflammation and soaking up free radicals at the vascular level, you're reducing plaque formation. In addition, by bringing down chronic inflammation, you're helping your immune system. So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. All right, let's listen in on what is going on with Apple's AI push.
Bloomberg Audio Studios. Podcasts, radio, news.
You're listening to Bloomberg Business Week with Carol Nasser and Tim Stenevec on Bloomberg Radio.
We want to get to Apple. Headline crossing just a moment ago. Apple plotting its AI comeback, artificial intelligence, with an ambitious slate of new devices, including robots and a lifelike version of Siri. There's a lot more. Let's just get to the guy who knows this company and put out this story. Here's our own Mark Gurman. He's Bloomberg News Managing Editor for Global Consumer Tech. He's out there on the West Coast. All right. Walk us through your exclusive. What did you learn about what Apple is up to when it comes to AI, Mark?
So the conventional wisdom is that Apple is lagging right now. It has no future. The product pipeline is, very limited. They're struggling in AI. The world is ending, and Tim Cook should be fired as CEO. I think I came on here a few weeks ago to tell you that there's no way Tim Cook is going anywhere. And it is true that they are struggling terribly in AI. But at the end of the day, Apple is a hardware company, and they have been planning this big new hardware pipeline. At the center of it is robotics, a push into smart home and home security, multiple new versions of Siri, and a slew of other devices from smart glasses to headsets to foldables. The centerpiece of the renewed AI hardware strategy is a tabletop robot. That's coming in 2027, sometime around then. This is a device that would sit on your desk, sit in your kitchen, sit in your living room. It would have an iPad-like display with sensors and a robotic arm. And the arm would be able to push the display around the room to follow people, to look at you, to summon you or be summoned by you, help you get work done throughout the day. The idea is to bring artificial intelligence to life in a way that hardware companies have not done so before, blending the AI with hardware manipulation and robotics. The company is also working on a HomePod with a screen for next year. This is a variation of that robotic device. This would not have the robotic arm, it would have a similar display and functionality. There's also several new versions of Siri in the works. There's a redesigned Siri visually for the iPhone, the iPad, and the Mac. There's new underpinnings to that Siri. We've talked about that. Apple has signaled that. There's a revamped Siri coming in the spring. There's also a new visual version of Siri for home devices. It uses something similar to Microsoft Clippy from 20, 30 years ago. If you remember that virtual assistant. Yep. And then you also, I know there's a lot, have a push into home security with the new home security camera system. Taps into a home doorbell as well. This would compete with Ring and Nest and ADT and other companies, and also serve as the sensors at the center of a home automation strategy.
So Mark, you gave us a lot to think about. We have a couple minutes left with you. We don't have a crystal ball, but we have Mark Gurman, which is the next best thing. If there is sort of a single device in here that's iPhone-like in the sense of it being the center of the universe for Apple, does one of them stick out to you as that?
I don't think the iPhone in the next 5 to 10 years is going to go away as the center of the universe. What I do think is going to happen is the next generation of ecosystems, instead of being built around the phone and the cloud, it's going to be built around AI. So all the devices, right, including the phone, are going to get demoted a bit, and AI is going to become the center of the universe. And so you're going to have your phone, your home devices, your earbuds, your glasses, your watch, your computer, etc. And those are all going to be built around AI as the center, moving away from the phone and the cloud as the center.
So the prototype's all ready to go. They're getting up the assembly lines and they're going to hit the stores, right? They're all ready to go, or not yet?
In terms of these devices, everything that I'm talking about today, those are mostly forward-looking. We're talking about things coming out 26, 27. There's a mention in the story of a robotic arm for retail stores and manufacturing. That's probably 5 to 7 years away. So we're talking 2030s there. I mentioned the foldable iPad Mac device. That's going to be at the end of this decade. The foldable iPhone is going to be at the end of next year. This year in September, a little less than a month from now, Apple's going to introduce its first redesigned iPhone in several years. This is the iPhone 17 line. Also the slimmed down iPhone, new AirPods, a new Apple Watch Ultra with a slightly larger display and satellite connectivity for hikers. So in the near term, some good stuff. In the long term, some much cooler stuff.
You know, the hardware that you've highlighted is nothing without the software, Mark. And you've documented the struggles that Apple has had when it comes to its own work with AI software, talking about potential acquisitions. Can Apple pull off this hardware with the way the software is now?
Yes. So as I mentioned in the story, they're looking at two directions for revamping the underpinnings of Siri. One is called Linwood, and one is called Blendwood. Linwood is using upgraded versions of the company's own internal foundation models. That's the team that Meta has been poaching a bunch of people from, including the head of the team. We talked about this a few weeks ago. Blendwood is using a third-party provider to rebuild Siri. So building Siri around models from a third party. And obviously third parties like Anthropic, like OpenAI, like Google, they've proven out their models. They work extraordinarily well. And so Apple's backup plan essentially is to go external so they're able to get their internal models up to snuff. And honestly, that makes a lot of sense.
All right, gonna leave it there. Mark, thank you so much. Of course, Bloomberg's Mark Gurman joining us with the latest on his exclusive on Apple. Mark is Bloomberg News Managing Editor for Global Consumer Tech. He's out there on the West Coast. Shares of Apple have been as high as 2.3%, intraday high, rising on Mark's story. The stock still up, but now only gained about 1.4%.
An upgraded HomePod, okay. But do you really need a robot arm by Apple in your home? I mean, that seems a little too, like, I don't know. I mean, it seems like a lot of fluff. I want to listen to The Hill here. This was published about 17 minutes ago. They're interviewing Bolton. It looks like about the Alaska summit.
With the help of Xero's small business accounting software, I've got the right information at my fingertips.
So business is a breeze. And I've got a good plan. Search Xero with an X.
If you haven't exercised in years, you have to start small with my beginner-friendly Tai Chi class. 3 reasons every man over 40.
I think you agree with me that if this is going to have any chance, Vladimir Putin has to understand that there are serious consequences and Trump will follow through on them if he doesn't make a deal in good faith and negotiate. If you were advising Trump, how would you make sure that Putin understands that Trump is serious?
Well, I think Trump has made the threats about increased tariffs on Russia and secondary sanctions pretty clear before, so he can repeat them. The question is whether Putin believes them. The number of extensions of various deadlines call it into question. The fact that Trump did impose a 25% increase in India's tariff could be, in a sense, evidence that Trump's serious, but on the other hand, inexplicably, he did nothing with respect to China. And I can tell you in India, they are incandescent about the way they've been treated. And there are all kinds of visits going back and forth. There's talk of Putin coming to India before the end of the year. Prime Minister Modi of India going to China for the first time since 2018. So Putin may well think that the threat isn't really going to deter these two countries, at least, from continuing to purchase Russian oil and gas. I don't think that's what Putin's mostly worried about. I think what he's worried about is reeling Trump back in, that he felt that he had manipulated him successfully in much of the first term and for the first 6 months of the second term.
But he clearly knows now he punched through the envelope and irritated Trump, which has brought us to the present place. So Putin's job and what he will focus on from the minute he and Trump lay eyes on each other is how he's going to convince Trump that once again they're Donald and Vladimir old friends.
Okay. You seem skeptical that Trump will see this for what it is based on what you've said in the past, and basically said that Trump, you think, is going to get played. 400,000 dead on the Ukrainian side, 1 million dead, 1 million casualties on the Russian side. What is the better plan than talking to Vladimir Putin that you seem to think is a bad idea?
Well, there's a time and a place for conversations between the leaders, and this is not it. You know, Trump has said, I'm not going to negotiate land rearrangements with Putin, although last Friday, that's exactly what he was talking about, land swaps that would implicate the Ukrainian constitution. But, you know, in diplomacy, there are all kinds of ways to talk. You can negotiate, which Trump says he's not going to do, or you can have what we call an exchange of views. You know how amazingly close those two things can be? I think Putin is going to try hard to explain to Trump what his quote-unquote peace plan is. I'm sure it's 100% favorable to Russia, but he's going to try and engage Trump. He's going to try and get him to say, you know, that's a fairly reasonable position. Or if Trump wants to make a change, Putin will try and accommodate him if it's not that serious. He'd like to make Trump back into his friend or even his advocate if he could.
Well, sure, if he could. Donald Trump has sort of had some choice words lately for you. Very unfair media is at work on my meeting with Putin, constantly quoting fired losers and really dumb people like John Bolton, who just said that even though the meeting is on American soil, Putin has already won. What's that all about? We are winning on everything. You yourself just said that Trump saw Putin for what he is, and Putin has realized that he has ended his patience quota with Donald Trump and is now coming to try and make friends. Having the guy you're negotiating with coming to you to try and make up is a pretty good place for Donald Trump to be in, right?
I don't think so, because I think Donald Trump is uniquely vulnerable to the kind of manipulation that Putin's KGB training will enable him to deploy. For example, within about 6 months of the inauguration, Putin picked up on what Trump had said repeatedly during the campaign, and has said again as recently as this week. This is Biden's war. If I had been president, it never would have happened. A reporter in Moscow asked Putin what he thought of that Trump comment, and Putin said, I think President Trump is right. If he had been president, there never would have been a war. That's how he plays on Trump, and it has worked in the past. It worked in the first term. We'll see. I think it's a win for Putin to be on American territory. He's an international pariah. He's led a rogue state in committing unprovoked aggression against Ukraine. He's been shunned by foreign leaders ever since. And now he's coming to an American Air Force base to stand in the spotlight with the President of the United States.
Yeah, look, I guess, again, I would go back to, you clearly don't like Donald Trump's plan. What's your plan?
I think the plan is, which we should have done 3.5 years ago, is get a strategy for Ukraine to prevail militarily. Donald Trump has called this war senseless. A couple of weeks ago, he called it ridiculous. Look at it from the perspective of the Ukrainians. They're fighting for their freedom and independence. Do you believe that's senseless and ridiculous? Okay? The Russians
I think you're
fighting for the Russian Empire.
We've said this. Right, no, I think that
this is important.
Senseless
Listen for a second. If you think it's a ridiculous war, how are you going to communicate to two leaders who both think it's in their national interest? They don't think it's senseless and ridiculous. It shows that Trump doesn't grasp the significance of the issues that divide these two countries. And if you don't get that, fashioning a ceasefire, let alone a resolution of the conflict, is very hard.
I would continue using those words in different ways, but I do feel the need to play this for you because Bill O'Reilly on his program went after you very hard on your criticism of Donald Trump. Take a listen.
I'll debate him anytime, any place. The man has nothing. Not one thing. If we're up to him, this will continue ad infinitum. And he hates Trump's guts. He hates him. He doesn't want him to succeed. He'd rather have death and destruction in Ukraine than for Donald Trump to succeed.
Is Bill O'Reilly on to something that you have it out for Donald Trump?
Yes, absolutely.
Look, I do my best, and I'm sure I fail, to talk about the merits of the policies and to say what I think is right with them and what I think is wrong with them. I'm not going to debate Bill O'Reilly. I'm not going to get down in the gutter with him. I'm sorry to see that kind of performance from him, actually. But I have made critiques of what I think Trump is doing wrong as a matter of policy. People are perfectly free to disagree with that, but argue with me on the merits of the policy.
Okay. To be fair, though, and I'll ask this, when have you come out and praised Donald Trump? That would go a long way, don't you think?
Well, I talk mostly about national security policy. I'm rarely asked about his domestic policies. I think many of his economic policies are correct. They're standard Republican fare. I think in terms of the culture war, I'm largely in agreement. But I certainly don't agree with his interferences in the marketplace, coming up with 15% taxes on India's exports. I have said I think Trump did the right thing to attack Iran's nuclear weapons program. I think he cut it off too short. I'd be willing for people to take the hundreds of op-eds I've written since I left the administration in 2019, take them all, read them all, and see if they're attacks on Trump personally or if they're discussions of his policy.
Well, you have always been policy-based in our discussions. I will give you that. Mr. Ambassador, along with you, you are an equal curmudgeon to all sides, which I admire, and it's one of the reasons we keep having you back. It's good to see you, sir.
Thanks for having me.
He hates Trump, for sure. There's no doubt about it. Please go to my store, the-studio-reykjavik.com, and get the olive leaf extract. It's a dual-purpose product. It's going to help with your cardiovascular health, and it's also going to help with your immune system. So please go to my store, the-studio-reykjavik.com, and get the olive leaf extract.
Technologically competent conglomerates, especially considering that, I don't know, since the Microsoft antitrust case a quarter century ago, we just haven't been exerting a lot of antitrust limitations. We're allowing these companies to bulk up. Think about what Microsoft owns, what Amazon owns, what Facebook owns. These are massive, massive companies. They're no longer just their core business. I want to say Amazon is barely a retailer anymore. They're a cloud player with this little side hustle selling crap to people at home.
That's exactly how you put it. One of those who get orders from their things, Larry. So do you have any concern about valuations? I mean, you're mentioning so many different companies, earnings season winding down too.
Yes, so we've been hearing for a couple of years now how bad earnings are going to be this quarter and that, gee, this market can't grow into this valuation. And yet earnings continue to surprise to the upside. Revenues have been really, really solid. You know, I think people have big problems when we hit any sort of inflection point or pivot, when there's a broad technological adoption. I recently wrote about not the Magnificent Seven, but the Magnificent 493. I'm more interested in the rest of the S&P 500. And the reason for that, valuation-wise, is that we go back to the late 90s, leading into the dot-com implosion. Yeah, Metro Media Fiber and Juniper Networks and Pets.com all crashed and burned. But what came after that was, we don't think of companies anymore as internet companies. We're all internet. Hey, we all live on email. We all work with Slack. We all, or Teams or whatever your group thing is. We all use Google Meet and Zoom. Yep. Everybody markets through the internet. It made everybody else more effective, more efficient. The chart I showed was just revenue per employee from early 90s to now. I suspect we're going to see the exact same thing happen over the next quarter century as all these companies adapt artificial intelligence.
All right, Barry, thank you. Always appreciate getting a few minutes of your time. Barry Ritholtz, he's the host of Masters in Business on Bloomberg Radio. Highly recommended. Great content there. Great guests.
All right, let's take a look at what MSNBC is saying about Trump and Ukraine. Let's listen to Mika.
They keep outperforming me and call me crazy, but I hope they never stop. Everyone thinks I have a team, a full-on 5-person operation, but it's just me. And
as President Trump prepares to sit down with Vladimir Putin tomorrow, our next guest is calling the summit Ukraine's nightmare and Putin's dream as the senator continues to push Congress to act on his bipartisan sanctions bill against Russia. Joining us now, Democratic Senator Richard Blumenthal of Connecticut. He's a member of the Homeland Security, Armed Services, and Judiciary Committees. Senator, thanks for being with us. Let's start there. What are you hoping will come out of the meeting tomorrow?
Well, let's begin with the fact that this summit meeting is a tremendous gift to Vladimir Putin. He's meeting one-on-one with the President of the United States. He has been charged with war crimes by an international body, and he's lucky not to be arrested. But what I hope is that Donald Trump will stand strong with him. And you were right when you said earlier it's a legacy-making moment. If Donald Trump stands strong and insists on a ceasefire before there are any talks, insists that Vladimir Putin be at the table along with Europeans, and insists that a security guarantee be the result of any kind of negotiation, he has the makings of a potential agreement that could win him the Nobel Peace Prize, which he has long sought. But my fear is that he will be the mercurial Donald Trump who allowed the deadline for sanctions to pass last Friday without any impositions of new levies on Russia, and that he will fail to adhere to those principles adopted yesterday by the European countries in their meeting, their conference with him. And I must say, a plug here for the European countries. I met with them in July. They are foursquare in favor of sanctions because they understand that Putin is a thug. He understands only force, military or economic, and the continued buildup of Ukraine militarily has to continue. Sanctions have to be imposed, and Donald Trump will find strong support in Congress in the Graham Blumenthal sanctions bill if he, in fact, adheres to those principles that he seemed to adopt yesterday with the European countries.
Senator, it seems like Putin is trying to muddy the waters a little bit. He just spoke from the Kremlin. Apparently he's talking about among the agenda items tomorrow now could be potential for U.S.-Russia business deals, talking about nukes, trying to talk about a variety of other things that he wants to distract President Trump, maybe not try to pin down on some sort of ceasefire deal. And that's the other fear that's been expressed here. So Putin not actually serious right now. He's just trying to buy time at a moment when Russia's finally making inroads on their offensive.
Well, that's a really good point, Jonathan. His strategy has been to play Donald Trump, delay, prolong. He's shown absolutely zero interest in peace. In fact, as we speak, he is continuing his assault in Cottrell on the Eastern Front in Donbass, Luhansk, and Donetsk, as well as in the north. He's continuing to bomb the civilians in cities around Ukraine. And his strategy clearly is to string along the United States, mocking us, really, and distracting Trump with these other issues that would appeal to Donald Trump's vanity or maybe his interest in business deals. In fact, as Joe mentioned earlier, if the United States invests in Ukraine, if it puts people, civilians, rebuilding Ukraine on the ground, it will not only send a message, but it will have an enormous effect. But in order for that to occur, there have to be security guarantees for Ukraine.
Right. And those security guarantees have to be given, but also they are guaranteed, are they not, by the presence of American businesses, American workers, American contractors, American subcontractors, people getting jobs, rebuilding the country that Vladimir Putin has spent the last 3 years destroying.
And that's the hope that I think can be achieved. You know, Ukraine has such enormous economic promise, not just the mineral deal that Donald Trump boasts about, but also its factories, its manufacturing, its agricultural potential. And right now, it probably has the strongest military on the continent, except maybe for France because of its nuclear arms. So it can be a very powerful ally, and China is watching. China is assessing our will.
Watching. China is watching, and again, for anybody thinking that the appeasement of Vladimir Putin in Ukraine would lead to peace, they need to check history, because it would. You're so right. It would lead to another war. China would move on Taiwan. I want to ask you why you think it is, because it does remain a bit of a mystery to me. Why is it that every American president this century has seemed to be suckered by Vladimir Putin, or almost all of them? You look at George W. Bush in 2004, 2005, saying, "I've looked into his eyes and I've seen his soul," and then that same soul invaded Georgia, the country of Georgia, 3 years later. You had Barack Obama talking about a reset, even having Hillary Clinton push a reset button, but talking to Medvedev, saying, we can do a lot more after the election. And then after the election, Vladimir Putin invaded Ukraine and invaded Crimea. Why is it that this guy knows how to play American president so well? And what can Congress do to help that not happen again? And so when Donald Trump comes back from Alaska, we actually have a deal that Democrats and Republicans can support.
Joe, as you know, because you've known presidents, they have to persuade a lot of people to reach that high office, and maybe sometimes they overestimate their own powers of persuasion and insight. When a president says he can look into another leader's eyes and read his soul, I think it reflects his maybe overestimation of his own personal powers of insight. But the point here is that Vladimir Putin has been remarkably consistent. He wants the old Russian Empire, the old Soviet Union restored. Ukraine is the first step. He will keep going if he's not stopped there against Poland, Romania, Finland, Sweden. That's why they want to be a part of NATO. What can Congress do?
The problem is that the age of Putin and the fatigue of the population of Russia, he can't continue this on and on and on. First of all, Putin looks like there's some health issue. Now, what it is, no one really knows. But it looks like there's a health issue. He can't continue on and try to get the old satellite countries in the orbit of Russia and reconstitute the Soviet Union. That ain't going to happen in his lifetime. It's just not going to happen. Now, what I do think is that Putin wasn't wise enough to take the off-ramp earlier this year, and that he's being belligerent. And unfortunately, Trump doesn't have a backbone, at least as of today. He doesn't seem to have a backbone against Putin. Now, at first I was like, okay, we're poking the bear. The NATO expansion, caused an issue. We weren't wise with the unipolar world after the fall of the Berlin Wall, and we created someone like Putin that led to this issue. So part of the issue is the United States encroachment of NATO. But then once Trump gets into office and he's saying, hey, let's make a deal, let's, close the war, all right, and Putin didn't take the off-ramp, then I switched, and it was like, no, Putin, you either make a deal, or I think our country, the United States, should go after and kill Putin.
Well, Congress can pass the Graham-Blumenthal sanctions bill. We have 85 co-sponsors right now. We've already, in effect, pushed the president to speak about sanctions in a way that is very encouraging, to impose sanctions on India. China, India, and Brazil are fueling Russia's war machine by buying the vast majority of its oil and gas and providing the sustenance for Putin's economy that would be crippled if it is stopped. And so the Graham-Blumenthal bill, I think if it's put on the floor, would pass by more than 90 votes, same overwhelming majority in the House of Representatives, and it would show unity for support to the president, as well as sending a message to China, as well as India and Brazil, that they can't, in effect, continue to make blood money. India is selling some of that oil,
So, Senator,
profit.
before you go briefly on another subject, you've been calling for the dismissal of an appointee. Robert F. Kennedy Jr. made an appointee to the Advisory Committee on Immunization Practices, and you've highlighted what you call some very disturbing rhetoric. Tell us about it.
Well,
I don't want to go down that road, but because there's usually, whenever I talk about stuff like that, it usually causes a strike. So let's do a commercial break. Please go to my store, the-studio-reykjavik.com, and get the digestive enzyme complex. This will help with your pancreatic health, especially if you're 40 years of age. You need to help your pancreas out. Digestive enzyme complex will help to break up carbohydrates, proteins, and lipids because it has the enzymes to do that. It'll be easier on your digestive system and easier on your pancreas. Super important if you're 40 years of age or older. Everyone's pancreas doesn't work as well. Omega-3. This will help to bring down systemic inflammation, and omega-3 helps to control your lipid profile. By bringing down LDL levels and increasing your HDL levels, you're reducing the chance of building up plaque in your vascular system. Super important to take. Goodnight formula has tryptophan, melatonin, GABA, and passion flower. This will help you to consolidate memory, detoxify your central nervous system, and you'll be well rested. Now, the reason why is that Goodnight formula helps you to get into 3 to 5 cycles of REM sleep and deep sleep. If you are chronically sleep deprived, you increases your chances of early onset of dementia. So it's really important to take Goodnight formula. And if you are well rested regularly, you are slowing down the aging process. So a great stack to help with your neural health is Goodnight formula. Omega-3 to help with your cardiovascular health, the digestive enzyme complex to help with your digestion and help with your pancreas. So please go to my store, the-studio-reykjavik.com. Use discount 5. You get $5 off any order. You spend $100 or more, you will get a free gift until supplies last. Alrighty. Let's listen to Bloomberg here.
Right? I don't have my little tote bag.
No, well, the man purse, it does go in the man bag.
purse.
Yes, the man bag. The man bag, sorry. Look, there you go, man bag. It's not the man purse, but I've been told. And yes, they do have them on them as well. So this is like a big thing, but it's a big part for luxury because luxury, it's been having a tough time, right? So this is a little bit something.
So think about this. You have retailers that saturate the market with goods that people don't really need and people overbuy, and then all of a sudden they have to change the buyer, the consumer behavior, and try to create new markets, new marketing segments. So they introduce years ago, I don't know, 10 years ago, maybe more than that, you know, these man purses, right? You know, and over time, you're starting to hear on how there's this fluidity of gender and the over commercialization of the Pride Month and all this stuff. We need to get back to like simplicity. We need to get back to minimalism. We need to get back to like the basics, like XY is a male, XX is a female. You know, if you have a karyotype, that's your gender, right? Now, we also need to focus on the pillars of society: God, country, and family. When you have some sort of affinity to spirituality, you are increasing your chances of morality. Now, can you be an atheist and be moral? Yes. You could also be religious and amoral. But the thing is that in general, society glue-on keeps the society together. One of the glue-ons for society is the pillar of spirituality. Another one is country. When you have a more affinity for your country, you'll want to be a productive citizen for the country's benefit. And you will not desecrate people that serve in the military, and you won't desecrate the flag. You will be honest and respectful of the history of your country. And the third pillar is family. Family creation, supporting your family, helping your family. But when you have a society that demonizes God, demonizes the country, and wants nothing but abortions and, you know, single families, parents, you have a declining society. So we need to get back to the basics. Those are the basics, right? A good foundation for society, and stop worrying about the man purse. But retail wants to do it. They don't care. They don't care what the society, as long as they reach their revenue quota for the quarter, they don't care what they do to society. Unfortunately.
Next. Try it again. You could have done better. Please.
It means calm waters, that this market has been extraordinarily resilient in digesting headlines that we might have thought could cause more volatility, mostly in a month like August, where trading volumes are lighter. But this market continues to just power on, and we think it's driven by two key things. The first one being that liquidity remains very abundant. And the second thing is that earnings estimates are going up. Risk assets love it when earnings estimates and growth estimates are going up. So when you distill it down to those two things, you can see why we've been resilient. But of course, it makes you raise an eyebrow if we're thinking we could be becoming complacent.
Any rotations out of what's really been working, what's always seemingly been working, the big cap tech names? Have we seen any? Are people trying to broaden out at all?
Yesterday was a big rotation day under the surface. It looked calm on the surface of the S&P 500, but kind of like a duck spinning its legs under the water. We were seeing huge rotations where you saw the NASDAQ, AI trades all trade off rather sharply, and things like Russell 2000 doing a lot better yesterday.
But that could be a one-off, right? I mean, in this environment, how does someone like you bet on a rotational shift?
Well, I think the one thing that we've been noting over the course of the last few days is that growth versus value has gone parabolic in the last month or so, meaning that growth has outperformed value almost in a straight line up. And what we see is after each of those parabolic moves, we had one in December of last year, we had one in July of last year, that you typically see a correction, meaning just a reversion back to the mean. So we wouldn't be surprised if you saw growth take a breather because it's been so strong, but that doesn't mean it's not still in an uptrend, which it still very much is.
How much does this market need the Fed to cut? Do they need a gradual cut? Do they need something more aggressive? We've had talk of a 50 basis point cut kind of creep into the conversation, not just 25 in September?
It's the why they're cutting, which is so important. If they're cutting because growth is much weaker than expected or marking down forecasts, then doing a 50 basis point cut because the economy needs the stabilization, that's not good for markets. If they're cutting because they want to get to this idea of neutral, inflation has moderated, growth is slowish,
Right.
but still healthy, then that's a place where markets tend to celebrate. But it's two very different scenarios.
I know you weren't listening to the show earlier, Kim, because you're out signing autographs. But the bottom line is, off the Besson interview with Jonathan Farrow yesterday, this idea of cutting rates massively has a massive ambiguity to it. I mean, on a microeconomic basis, it could cut either way.
Well, there was a line down Lexington for the autographs, if you were wondering. The second one is that it really depends on where economic surprises go for the response to rate cuts. Last year, when the Fed cut rates by 100 basis points and the 10-year went up by 100 basis points, it's because economic surprises were going straight up. Data coming in better than expected, as well as GDP forecasts being revised higher. They were being revised higher by almost 70 basis points during those months.
Do you have a clue what earnings are ending 9/30? JP Morgan will be 10/16, 10/17-ish. Technology will be November 1. Do you have any clue? How do you do it?
Well, we're in the 270-ish range for 2025. We do know that earnings have continued to come in better than expected. Look at the second quarter, 11.8% growth versus the 4.9% that was expected going into the quarter. But then as you turn your eyes to 2026, there's about a $300 estimate for S&P 500 earnings. That includes not only an acceleration in the top line, but over 100 basis points of margin expansion. So there's some optimism that's already being contemplated.
Kim?
All righty.
Having insurance isn't the same.
Now,
as
the
having
10-year
bond.
treasury is still trading at around 4.2%, a little bit above that. But if the Federal Reserve lowers rates, you're going to see a yield curve shift along the curve. Please go to my website, the-studio-reykjavik.com, and get the resveratrol. Resveratrol will soak up free radicals, help with the health of mitochondria, boost up your energy levels, get rid of senescent cells. It'll help with youthful gene expression. Super important for an anti-aging protocol. It stacks really well with a bunch of other supplements like C60 and ubiquinol and NAD+, clarity factor, even Myotrol. Now, let's talk about Myotrol. Myotrol is a supplement that you take to help to build muscle and to maintain muscle and help with your mitochondrial health. It has flavonoids, polyphenols, and lignans to help with that gene expression to build muscle. Do some resistance training, take the Myotrol, you'll build muscle. It stacks really well with gladiator barley to further enhance muscle growth. Now, when you turn age 40, you'll start to notice that to build muscle, it's harder. To maintain the muscle starts to become problematic for males and females. That's because when you get older, you are starting to methylate genes. And when you start to methylate your genes, you're turning the expression off, or you're reducing the amount of expression that's possible. So when you get older, this is the reason why it's harder to gain muscle. Well, if you follow my anti-aging protocol, what you're doing is you're slowing down the methylation process. And by slowing down the methylation process, your epigenetics is of a more youthful profile versus someone that doesn't follow an anti-aging protocol. So by reducing free radicals, by reducing inflammation, by revving up the health of your mitochondria and boosting up your energy levels, those are all very beneficial to slowing down the methylation process. If you're chronically sick, guess what? You methylate faster. If you are a person that is surrounded by toxins, you will methylate faster. So you need to view this in a holistic way. So proper diet, proper exercise, proper sleep, proper supplementation, stacking the supplements the right way, you're going to get the max benefit. So taking Myotrol is going to help you to build muscle and to maintain that muscle because it helps with the
the gene expression. And if you slow down the aging process, you'll get further enhancements. Now, another thing that's really important to take when you're age 40 or older is vitamin B complex. Vitamin B complex, the first 4 B vitamins will help with the electron transport chain. That's where you get most of your ATP creation in your mitochondria. Also, B vitamins helps with cellular metabolism. So if you're increasing your metabolism, you're slowing down the aging of the cells and the tissues. When you get older, usually what will happen is that the mitochondrial health will go down, your cellular metabolism starts to go down, and it's a downward spiral. Well, if you rev up your cellular metabolism and the health of the mitochondria, you'll have more ATP. In addition, vitamin B complex has B12. B12 is super important for many reasons, but one great reason is it helps to protect your nerves. Guess what? You're going to need that when you get older. So a great stack here is to take the resveratrol, the myotrol, and the vitamin B complex. Take them together. With the resveratrol, you're helping with the youthful gene expression. With the myotrol, you're helping to build muscle and maintain muscle through the gene expression. Make sure you do resistance training. And the B complex will help with your cellular metabolism and protect your neurons. So please go to my store, use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. Click the link that's in the description of this video and all my videos. It'll get you to my website. It's the-studio-reykjavik.com. Help support the work I do. I do these videos for free. I'm trying to teach people on how to improve their health. And not only that, my perspective on what's going on in the markets. Now, what's interesting today in natural gas is that inventories are higher than expected. So there was a sell-off at approximately, the sell-off started at approximately 10 o'clock, 10:30. Intraday trading was at 2.8 for natural gas, and then it bottomed out at about 10:45 at 2.78 and mean reverted back. So inventories for natural gas are a little bit higher. I think also the suppressed price of natural gas is related to the suppressed price in the oil market. All right. Let's listen to CNBC.
Want to keep your hairline where it is? Through Hims.com, you can explore a range of treatments that work best for you, so you can grow thicker and fuller hair in just 3 to 6 months. Get ahead now to keep the hair you love.
We start off with that big call from the Treasury Secretary. In an interview this morning, Scott Bessent telling Bloomberg that the Fed should cut rates by 50 basis points next month, and that ultimately rates should be 150 to 175 basis points lower than they are right now. That got us wondering, what would that mean for the market, starting with stocks? The S&P and NASDAQ hitting records today, but it was the long underperforming small cap Russell 2000 that saw the biggest gains. To out of favor groups and sectors rebound, if rates drop, I think we would all agree that equities would probably rally. Where would the rally be most pronounced?
Well, you're seeing it in the small caps, no question about it, and I think Karen's spoken about this as well. I'll say this, we talked about it last night. It was this time last year that the market started pricing in 6 rate cuts for 2025, and the market, through the lens of the S&P, was significantly lower. So the market has rallied. Now we're starting to talk about more rate cuts. Personally, I think it's all priced in, but quickly, I find it fascinating and listening to Treasury Secretary Bessent talk about the reasons for these rate cuts are the softening job market, which, you know what? Maybe it is a softening job market. With that said, what we heard from the administration last week was those revisions were rigged and it was a political hit job. So you can't, my point is you really can't have it both ways. Either the job market is softening and the revisions are legit, or the revisions weren't legit and the job market is robust. So pick a side, I guess, is my point.
I agree with that.
Yeah, so I agree with you, agree with me on the small cap, which that's not news, right? But to the extent that there is borrowing there that is fixed, that could be set lower, that's huge. I think anyone with a not great balance sheet Also, if you look at who has really been hurt by higher rates, which is some of the commercial real estate, right? We've got a lot of paper coming due. To the extent that that could be cheaper, that would be a good place to rally. But also, it's just math and then discounted cash flow. If you're using a lower rate, you get a higher multiple, higher stocks.
Yeah, the fact that the stock market in certain sectors has run ahead of that, and you guys just mentioned the Russell 2000 small caps. Look at home builders today. I mean, huge. Like, just the fact that they're already kind of going in there and taking that performance, whether it happens or not, is a very odd thing to me. I get the reflex sort of reaction to some degree. I think a lot of investors are looking to play catch up in some areas that they think have been kind of suppressed because of the high rates.
Yeah.
But then you think about it this way, okay? Like last year at this time, the same debate was happening about the labor market. And, I think the Fed at that point was probably a bit more confident that with 3.2% CPI, I think that was the July number or so at this point, that it was going down in the direction that they wanted it to go down. The market was not pricing in a trade war at that point, right? And you had unemployment that was below 4%. And right now we're at 4.2%, right? And then GDP growth, the first half of 2024, was basically 1.25%. Well, that's where we were this year. So for all intents and purposes, the big change right here is that unemployment's going the wrong way, part of this dual mandate, and now inflation, part of the dual mandate, is probably not going much lower that quick. And so I just think about this from a growth perspective. The thing going forward, if we have 15% base rates on a lot of the imports that are coming in, and then many from China at 30%, that has to weigh on growth. And, I think I just said this, or I heard him say it earlier today or something like that, is that we just really haven't seen, I guess, the headwinds from higher prices just yet. We've seen plenty of scenarios where there was the autos, where the companies were willing to kind of eat that cost right now. But a lot of them, if you still see unemployment going higher and you see growth, they're not going to be able to do that.
Nothing happens in a vacuum, right? And so the impact of tariffs could still yet be felt, Tim. But at the same time, the offsets could be lower rates, lower borrowing costs, other savings from the One Big Beautiful Bill in terms of, expensing research and development, for instance. There are other offsets potentially that could help growth, even if tariffs weigh.
Yeah, and I think that's the whole argument for rates. I think the administration is arguing that too, that there is an unnecessary headwind, whether it's 150 basis points, I don't know. And my guess is that hedge fund manager Bessent felt a lot different about the Fed's role in stimulating the economy than Treasury Secretary Bessent feels. I also think the conversation we often have on the desk, we had a bit of it last night, which is that we don't know what the long end's going to do. We know that on the short end, that really does help those folks that are pinned to short-term borrowing and those dynamics that really are moving. The yield curve has steepened. We also know, we had this conversation also last night, that liquidity is extremely high. So I think equities will continue to rally. And I think, back to your original question is, what performs in that 150 basis point cut environment? I think you're barbelling this thing. I think you're grabbing high multiple tech where those discounted cash flows are farther out in the future. They make less, they don't make money, et cetera, or the ones that don't make a lot and have very expensive price to sales ratios. Those are going to rally. I think the mega caps will. And then I think the other side of your barbell is the value part. And look at where we're starting to get some breakout. We've had the breakout in financials. They will continue to do well. Look at healthcare. Today was a really interesting day in healthcare. There's a lot of headwinds from Washington there, but I think that's another place to play.
All righty. Please go to my store, the-studio-reykjavik.com, and get the nattokinase. Nattokinase is fibrinolytic. It's going to break up clots, and nattokinase helps to improve your lipid profile. So it's going to help with your cardiovascular health. Vitamin K2 and vitamin D3 are dual purpose. They'll help with your cardiovascular health by pulling some of that calcium deposit out and reducing further calcium depositing. But vitamin D3 and K2, when you do resistance training, actually helps to improve your bone density. Stack these together, great stack for cardiovascular health. And again, vitamin K2, D3, great for your bone density. Magnesium, taking magnesium supplements also increases the efficacy of vitamin D3. Okay. Let's listen to
CNN about DC being taken over by the feds.
Sound. It might not be the first thing you think of.
Federal law enforcement is out again here in Washington, D.C. This comes after President Trump's decision to federalize the police force in Washington, D.C. But this is already causing some community outrage. Watch. This was the scene overnight at a checkpoint along one of the city's busiest streets. Protesters made clear their feelings about the increased federal law enforcement presence. A commander with D.C. police told CNN it was a routine operation. Joining us now is Washington, D.C. City Council member Charles Allen. Charles, thanks so much for joining us. First of all, what do you know about this checkpoint set up on the very popular 14th Street near U Street Northwest here in Washington, for those people who know the area? Is that typical for law enforcement in that area?
Well, what's routine is that MPD will do, and has been for a number of years, conducting traffic safety checkpoints. That's everything from looking for impaired drivers to looking for outstanding warrants. They make arrests occasionally from that, but it's constitutional and legal, and we haven't had protests around those because they're largely effective. It's also where community policing takes place. NPD will even look to check and make sure someone's car seat is installed correctly. So those have been standard for the last several years. They've had good effect around getting at dangerous drivers. What's different is now you've got all these federal law enforcement folks. They don't wear a badge. They don't wear their name. They're covering their faces. And that's very different. And what you see from the community reaction is what I'm concerned about. That federal law enforcement fundamentally changes the dynamic of community policing. They're not trained for it. They're not equipped for it. And it just amps everything up in a way that's very unconstructive and can lead to actually more dangerous situations.
President Trump just a little while ago said crime here in Washington, D.C. is, quote, totally out of control. His words, I'm quoting once again, worse than ever. What's your response to that?
Well, we need to be able to call out the lie where it is. And that's just simply not true. He continues to say it, but it is not true. He's painted this dystopian vision, and it just doesn't track with the facts on the ground. Over the last 2 years, we have driven crime down by about 50% of violent crime. Now, listen, everybody will be the first to say any crime is one too many, and so we still have work to do. We still have progress, but that happens best with the coordination between the mayor, the council, the community, MPD, because that's what's gained and had to gain over the last several years. The federal law enforcement aspect, putting military members on the streets of our city, does not make us safer.
Has the administration been communicative with local officials like yourself about its strategy here?
Oh, I don't know if there really is a strategy. There's been no word from the administration to myself. When I talk to members of the council, we're not hearing anything. And I think that's part of the problem. It's even created chaos and disorder even within MPD, where command staff and officers on the ground aren't quite sure who's calling the shots, what is the strategy. So there's a lot of bluster that we'll see from behind a podium or in front of a camera from the administration, but we're not seeing an actual coordinated strategy or, frankly, the willingness to come in as partners. And that's the problem, because there are a number of ways the federal government could come in as a partner, and that could actually be a good thing, but we're not seeing that.
I want to play something for you, Councilman, and get your response on the other side. Listen and watch this.
And then he took a Subway sandwich about this big and took it and threw it at the officer. He thought it was funny. Well, he doesn't think it's funny today because we charged him with a felony, assault on a police officer. And we're going to back the police to the hilt. So there, stick your Subway sandwich somewhere else.
That was the U.S. Attorney for the District of Columbia, Janine Pirro, describing an incident involving a man who allegedly threw a sandwich at a federal law enforcement officer. The individual has been charged with assaulting a federal police officer. Give me your reaction, Councilman, to all of this.
I hope every American out there can understand the incredible irony that is taking place right now. The very same administration that pardoned hundreds, thousands of people who committed violent acts against our police officers here in D.C. on January 6th in an attempt to overtake the Capitol and pardoned all of those convictions on assaults on a police officer who tried to harm and kill our police officers. And she wants to throw the book at a guy that threw it.
What about the deep state and the Democratic Party overthrowing the election? But we don't want to talk about that, do we? No, we don't want to talk about that. I would really like someone to audit those machines. All right. Let's listen to balance of power on Bloomberg.
Is there any truth to that?
You know, there is some truth that the likes of Walmart, they have pricing power with their lines of their the people who they're sourcing from. However, it isn't true that the overwhelming majority of the tariffs are going to be taken up by foreigners. Yeah. It's going to be a combination of the suppliers, the companies, and the consumers. And now that we actually have a policy, we have a framework in place. 15% as the baseline. Companies can work with that, and they're now going to increasingly pass that through. This is what Goldman Sachs was saying, yeah. And this is what we're starting to see.
So they probably won't get a new chief economist.
No,
I guess
they're not going to.
You had something going there. They'd be lucky to have you. I have to mention IPO. We got another IPO today. This has been a daily thing here lately. The new issues market is happening. MIAX, Miami International, just opened $31.65. The IPO price was at 23, so we've already got a nice bid underneath the stock. It's up 34%, 33% right now from the IPO price here. Yeah. BOP, BO, IPO. We're specializing in IPOs around here. Producer James tells me every morning what's about to go public. We don't buy the IPOs because, well, you can't do that when you work in this business. But there you have it. Miami International, 31.65. We'll keep tabs on it, 31.10. If you're playing along in your home game, that's a pretty nice 35% pop. But I'll tell you what, if this everything risk, people are embracing it at the moment, and that's kind of what I want to ask you about. When you consider the risk that you're describing with where we could be in 6 months, it's almost impossible to gauge. What do you make of the market at basically an all-time high?
You know, I think that the market has discounted all tariff news until it affects the economy. Mm-hmm. I mean, when we look back and we think about what's happened, we had a spike in the VIX to 40, and that was, you know, an all-out panic. And the reason is because stocks are fully valued. Bank of America, they had a survey recently. 91% of fund managers said that they think that U.S. equities are overvalued. So it's very difficult to go higher on those expectations unless you leg into it as a result of the economy. Okay. If the economy falls apart, then you have a big problem. And that's what we see. And the market is going to boil over. It's going to continue to drift higher until we have any sort of hiccup that suggests that the economy is about to fall apart.
Drift higher is an interesting way to put it. And we're looking at a VIX right now of 15. The S&P 500 is down 0.25% in this environment. Is pretty remarkable. So the investor's saying, call me when it matters.
Exactly. So it won't matter unless it affects the overall economy. Yeah. I think that what we saw with March 2020, and the ability of the Fed and policymakers to paper over cracks in the economy. Even then, when we had a very short recession, stocks were able to power higher after that. And so that's an ingrained behavior. It's almost like Pavlov's dogs, who understand that this is where things are. Until bad things happen, they're going to keep on going higher.
You're great. Edward Harrison. Look for the Everything Risk newsletter to follow up on the conversation we're having. Always great to have you, Edward. Thank you so much for the insights. As we watch Wall Street and Washington together, they cannot be separated these days. We'll look ahead to tomorrow's meeting with Putin next on Bloomberg.
Please go to my store, the-studio-reykjavik.com, and get the C60. C60, you can get it in avocado oil,
MCT coconut oil, or extra virgin olive oil. Now, C60 is a carbon molecule, 60 carbons in one molecule, and it's going to absorb free radicals. C60 has to be in a lipid, so that's why it's in an oil for proper absorption. Take a teaspoon a day. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It's going to soak up free radicals at the vascular level to help to reduce plaque buildup, but it'll also soak up free radicals in the cells and in the neurons. And by doing that, you're reducing the stress in the cell, you're allowing for your mitochondrial health to improve, and you're going to have more energy, more ATP. So your immune system and your endocrine system and your other organ systems will perform better, including your neurons. So please go to my store and get the C60. This is something I've been taking since 2016. It's a major part of the pillar of my anti-aging protocol. The first pillar is to take Cleanse Max 35 or Max 14 to help boost up the immune system. C60 is the second pillar to soak up those free radicals. The third pillar consists of turmeric, ashwagandha, and lignans to bring down inflammation. That's going to help your immune system and your cardiovascular system, and Boomer Boost to boost up your energy levels and rev up your metabolism. By doing that, and you're doing that every day, you're going to slow down the aging process. So please go to my store, the-studio-reykjavik.com. Take C60, take it every day, a teaspoon a day. Use discount 5 and you have $5 off any order. If you spend $100 or more, you get a free gift until supplies last. This is interesting. I want to listen to the 5 on blue collar voters are done with Dems.
You need to meet surging content demands without compromising your business or your brand. With Adobe Express, your marketing, sales, and HR teams can...
The Democrats are now facing a blue-collar revolt that could further crush them at the ballot box. The New York Times reports this. These are the voters who should scare Democrats most. They talked to working-class folks, some Biden voters in 2020 who flipped to Trump. They were fed up with the party's obsession with identity politics. One trucker puts it bluntly, quote, "It seemed like they were more concerned with DEI and LGBTQ issues and really just things that didn't pertain to me or concern me at all. They weren't concerned with really kitchen table issues." And after years of loyally backing Democrats, the Teamsters Union reportedly donating to battleground Republicans in the upcoming midterms. Even Bernie's waving the warning flag.
And we have got to understand that the Democratic Party, in many, many respects, has turned its back on the working class of this country. And if Democrats want to win elections, they're going to have to stop taking money from billionaires and start responding to the needs of working people.
You know, Harold, Bernie actually refused to meet with the Teamsters, which I think shows it's not necessarily about politics, but about power, possibly. And this divide between the Democrats and working class voters could get worse if Mamdani wins, because his biggest supporters are affluent white liberals and not the working class.
Well, a couple things. I think that we come to the Mamdani race in one moment. Sanders and Mamdani are one of a kind. They endorse each other, support each other. Elizabeth Warren as well. So they come from a side of the party that believes, not my side of the party. Mamdani is actually a socialist. I don't consider him a Democrat. Two, in my lifetime, there have been two major realignments of the political party system. One was in '92 when Bill Clinton won. Democrats had not won in a while. He had a different message. He was different on some of the social issues, including capital punishment. He was even different a little bit on the abortion issue. He was against late-term abortions. In my lifetime, I'm 55, the first time a national Democrat had spoken like that. He then gets to office 2 years, 4 years later, 5 years later. The first time the government had been balanced, the budget had been balanced at federal level in 30 years. It still hasn't been balanced since. And in 2016, President Trump, what he was able to do in upending the way working class voters thought about the Republican Party, in the way even minority groups, which have traditionally gone for Democrats, how they thought about the Republican Party. As we sit here today, Democrats still haven't gotten the right message. They seem to be more cathartic than strategic in their thinking about how to go forward. Wouldn't it be nice if we actually offered ideas? I had some time one Saturday, I listened to an interview that Bernie Sanders had. I watched some of his rally in West Virginia. I was clearly didn't have a lot to do for a little bit on Saturday. But it was interesting because I listened, and a lot of the things he said I agreed with in terms of his diagnosing of the challenges. But his answers, he didn't really seem to have any answers. A lot of it, when it came time, I thought he'd give answers, he just criticized President Trump. I thought to myself, wouldn't it be great if Democrats would encourage the administration to provide, since they want to shut the Department of Education, say instead of doing that, let's provide more funding for cities and states that are doing reform things, innovative things. You talked about some of the things in the past, and including the state of Mississippi, which is doing remarkable things around K through 12 education. Cities that are doing things in the charter school space, even in the voucher space that's working. Let's reward those things that are working. Two, the biggest challenge, one of the reasons that Madami's doing well here in New York, is that he's talking about affordability and housing affordability. Why not give first-time home buyers who qualify, who are actually eligible, who have the income, give them bigger down payment assistance, and let's give them bigger tax breaks to be able to own a home. President Trump said no taxes on tips and overtime. I kind of like that instinct, but the real thing ought to be to help everybody that's earning $70,000, $80,000, $90,000 a year, a little less. The first $50,000 of income should be tax-free for every American. That's what Democrats ought to be offered. The only way we're going to get back this group of voters and make this thing more competitive and have a chance to win again is if we stop attacking Trump and start addressing and listening to voters. It's a very simple thing. It's happened for now. We'll celebrate 250 years next year. Every politician that's ever won has actually listened to voters and tried to respond to their needs and aspirations. And we're not doing a good job of that right now.
Joy, I'm often reminded of this one time in 2015 or 16, right around when President Trump was running, he had a rally. And he says, this country is dying because of political correctness. And he gets this huge standing ovation. And it was one of those times where I thought, that he's tapping into something that has played out even to this day, to the point that now you have corporations relieved that they can get rid of their DEI programs. And universities are finally being brought back to some common sense. And I do think that that whole DEI woke agenda really did alienate workers in addition to the economics.
Sure it did. Yeah, I mean, you think about
when you get in your car, you just need to put your location in the trip planner. It recommends where you need to stop, for how long, park, plug in, and you can go.
Sure it did. Yeah, I mean, you think about blue collar workers. When I hear that, I guess I think about like Midwesterners that are diehard, dyed-in-the-wool union workers, conservative in their home, and have supported Democrat candidates over the years because of the Democrats' strong stranglehold on unions. And I think that's one of the places where President Trump has really flipped the script. I mean, when you look at Democrats from policy, not just from the things they say, but from their policy, they've abandoned the assembly line for the disability line. They've abandoned those struggling to get ahead in life for those that are unwilling to get in line to begin with. They've abandoned Americans and imported their own voters. I mean, those are the policies they've supported at least over the last 10 years. What is so ironic about all of this is Democrats still hold on to this idea that you can use your identity to connect to voters. I mean, you look at Scranton Joe, Mondami comes in and he talks about all these things. He doesn't really want you to know too much about his past or how he gets his rent. Donald Trump is a billionaire, Ivy educated from Manhattan, and he connects with people in these small towns, not because he uses his past or his background or his identity, but because he says the things they want to hear and does the things they want done. It really is that simple.
It is simple.
And I don't know why they won't, much like Harold, I don't know why Democrats want to take up some of those.
In the last 4 years, we talked a lot about the Democrats pushing forward on student loan forgiveness and climate change. And those were two main issues, I think, that alienated them from their workers.
I'm glad you brought that up, Dana. You know why? Because when you say blue collar, we think, who do you mean? It's more about who you aren't. When you look at the Democrat Party, you don't see blue collar.
you see the polar opposite, this ghastly experiment of identity extremism, luxury beliefs held together with rage speak and victimhood. Blue collar, it's not non-binary, trans, screaming about, the evils of white privilege and Gaza politics. They aren't blue collar, not spending their afternoons on TikTok or smoking weed at the park, demanding others to pay for their college loans. They work for a living, they raise families. When you look at it, it's funny. That's where the whole union thing seems so glaringly weird. Like, how is the union still there? Why are they still there? There's not a single issue that the Dems champion that resonates with, I'm going to say it, normal people. Party was hijacked by an unhinged, marginal, and mentally ill activist class, friendless activists who see in their social media footprint power and status, nothing blue collar, nothing real about them. And now you have, I think Trump is somehow approaching the unions in a way that says it's okay to come here, the water's warm, get away from these weirdos. They're not good for you. They don't care about you. And I've said it a million times, and I think, Harold, one day you're going to agree with me. I think that identity politics has done more to destroy the Democratic Party than anything, because it reversed what we were about, the melting pot, which was about stressing unity over differences. And identity politics went the opposite direction. It leaned into the very thing that we were trying to escape, which was tribalism. Tribes against tribes ended violence. And so what we did was we pitted groups against each other into some zero-sum game, and you basically get like a political cannibalism, where if I'm not high on this pyramid, I'm talking too much pyramid of being aggrieved, then you are, and you can't share. I'm going to shut up.
I don't know why you provoked my name. I don't disagree with you. I think identity
I was
politics.
just trying to get a rise out of you, Harold.
Let's give you the last word, Emily.
And that was so telling. So the Teamsters General President, Sean O'Brien, he said that Bernie Sanders stopped talking to him. And he was being interviewed, and the host was like, well, when did he stop talking to you? And he said, it was when we did not formally endorse the Democrat Party. And it goes back to your earlier question of, it is not about politics at all. Because if it was, then Bernie Sanders, presidential candidate, would have sat down and said, why aren't you endorsing me? He cold-shouldered him because he took it personally, and it was about power. And that kind of hubris is what the Democrats have been to the table, which is an expectation. Oh, we are the automatic labor coalition. And the reason that they're so salty and they've taken such offense is because they thought they didn't have to earn it, but they just got it, right? They got those votes. When you look at where their money is going, the Teamsters PAC, the fact that they spread money to the NRCC, individual GOP House candidates across all of these battlefield states, not just white rural areas, but super urban, dense, multi-ethnic areas, and even the Republican Attorneys General Association. So the worst thing the Dems can do right now is get mad that they were broken up with and not listen to the reason why.
We'll see what they do. Okay, ahead, soft on crime insanity. A trans sex offender could soon be back out on the streets after allegedly trying to kidnap a Denver kid.
Click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis. You won't get it anywhere else.
You probably know Vistaprint for business cards because we've printed them for millions of small businesses over the past 25 years. But we also print signs, stickers, shirts, and more. If you need it, we print it. Print it all with 20% off for new customers at Vistaprint.com.
If you're considering cataract surgery, surely you've heard of the Light Adjustable Lens implant. But did you know there's a new adjustable implant called the Light Adjustable Lens Plus? So has the Light Adjustable Lens become even better? In this video, we're going to tell you everything you need to know about the Light Adjustable Lens Plus, what makes it different, how it works, and whether it might be the best option for your eyes. Let's get started. To learn more about modern cataract surgery from some
It's going to be charming at the table. You're not the first person to suggest that. That's what
I would think so. I haven't met Putin myself, but from everything we read and understand from history, I mean, this is going to be a further charm offensive with a lot of things that, shiny objects perhaps here and there, but also maybe perhaps these earnest historical arguments that he believes deeply that Ukraine should be his.
We still don't know about staging here. We know it's at the air base. Have you heard anything in terms of optics, what the backdrop would be?
Well, I think for security purposes, the officials have been pretty buttoned up about that. I know our reporters who cover those agencies have been speaking with,
Sure they are.
the appropriate.
They never tell me anything, these guys. I mean, are we serving sandwiches? Like, you wonder what kind of accommodations and how welcoming will be to a man who's seen as a pariah around the world.
Well, I think we'll have further details today on that. But yeah, if you can imagine, Anchorage is not the sleepy place that maybe sometimes it usually is. And it's bustling.
The advance
It's
must be
bustling.
wild.
Yes, for
With
sure.
Both sides, right? I suspect there are Russians and U.S. advance workers bumping into each
For
other.
sure.
in Anchorage this
On
week.
top
It's
of
pretty wild.
schlubs like us in the media, we're
That's
trying
right.
to figure out how to cover it.
That's right. We're all coming. We're going to have special coverage. I'll remind everybody, tomorrow's going to be a long day tomorrow. And we could find ourselves here on Bloomberg Radio at 10, 11 o'clock at night by the time, did I just say that out loud? By the time this is done, because that's what we're here for, and this is about as important as it gets. Michelle Gianrisco, always love having you on. Thank you.
Great to be here.
And we'll be
Thanks,
looking
Jen.
for Michelle's reporting and editing, of course, as this all unfolds here on Bloomberg. We'll assemble our panel next. Rick Davis and Jeannie Shanzano are with us here on the Thursday edition of Balance of Power. I'm glad you're with us too on Bloomberg Radio, satellite radio channel 121. Get us up on YouTube because the president will be speaking, well, they tell us at least a half an hour from now, 1 p.m., delivering remarks from the Oval. Search Bloomberg Business News Live. I'll meet you on YouTube. Stay with us right here on Bloomberg.
Let's do a market update. So the S&P 500 is trading at 6,452. VIX is trading at 15. The Euro USD is trading at 1.16. Oil is trading at $63.84 a barrel. BITO is trading at 21.31. Bitcoin is trading at 118,000. And the Japanese yen is trading at 147.8. Now, what's my take on what's going on with the market? Now, today was the PPI data that came in a little bit hot for inflation for wholesalers. On Tuesday, CPI came in slightly higher than expectations, but pretty close to within range. It's projected that inflation is going to be anywhere from 3.1 to 3.3 annualized. So that's above the 2% target. Probably the Federal Reserve should not lower rates because of that data. But the question is, will the demand from consumers shift downward? If it does, then the Federal Reserve probably will need to lower rates. Now, I'm concerned that if they lower rates too quickly, that it will be inflationary. I take the stance that if you have unemployment below normal and you have inflation above target and you lower rates, that's inflationary. That's the monetary policy theory that I hold. But what I think will happen will be that the Federal Reserve will lower rates by a quarter point this year, and that will be an accelerant to increase equities. Now, there's been a little bit of an undulation in natural gas. It's trading at 2.8 right now. It's trading below the $3 mark. I think primarily due to two reasons. One, there is an increase in inventories of natural gas that came out today. Two, I think Trump is actually talking to the Saudis to actually lower energy. And that way it hurts Putin in terms of funding his war, because Putin is selling oil to the Chinese and to the Indians, to India. So I think that there's a purposeful suppression of price in the energy sector. We'll see what will happen with the summit. If peace starts to abate, we may actually see an elevation in prices for oil and natural gas. but probably there won't be peace or a ceasefire that comes out of the summit, and further negotiations and continuation of the war in Ukraine will ensue. So something to keep your eye on. I think that tomorrow and the aftermath of tomorrow is going to be super important for Monday trading.
On Wall Street, we do check markets all day long here at Bloomberg. A record-breaking run in stocks is taking a breather today after a pickup in inflation. The S&P's down 15 at 64.50, still close to a record, down today by 0.2%. The Dow lower by 203, down 0.4%, while Nasdaq is down 38. For Nasdaq, a decline right now of 0.2%. On a down day for the rest of the market, the Bloomberg Mag 7 index is pushing higher, up by about 0.3%. 10-year at 4.28%, with the 2-year currently yielding 3.73%. Gold down $22 the ounce, 33.33 the ounce, down 0.7%. West Texas Intermediate crude up 1.9%, 63.82 a barrel on WTI. And Bitcoin now down 4.2%, selling off to 117,846. Wholesale inflation up the most in 3 years last month. That's got investors dialing back bets on a rate cut next month. Producer prices in July rose 3.3% from a year ago. Economists surveyed by Bloomberg were looking for 2.5%. Neela Richardson is chief economist at ADP and a Bloomberg contributor.
This inflation surprise is something that should be considered with a whole bunch of other data that was leading up to this point, showing no smoking gun when it came to tariffs and inflation. So the big picture is it's an economy that continues to perform. It's just not as dynamic as we're used to seeing.
ADP chief economist Neela Richardson. Costco wholesalers decided not to dispense the abortion pill mifepristone at its more than 500 pharmacy locations. A decision hailed by a group of faith-based activists who urged the retailer to avoid selling the drug. Costco shares, they're up today by about 0.7%. First day of trading for the exchange operator Miami International, MIAX on the ticker, up now by 32%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That's the Bloomberg Business Flash. Back we go to Washington. Once again, your host, there he is, Joe Mann.
All right, Charlie, many thanks. Charlie Pellet. We'll have much more coming up a little bit later on. Top of the hour, we'll update the markets as we anticipate comments from President Trump. The White House told us to look for remarks in the Oval at 1 p.m. Eastern, so we'll see if we're close to on time when he speaks. Of course, we'll bring you there. Unclear exactly what the topic is going to be, but we're counting down to the big meeting. He may well be in Alaska by this time tomorrow, as the president plans to fly away early tomorrow morning to meet with Vladimir Putin in Anchorage. And I want to point you to a conversation I'm really looking forward to in our second hour, also at 1 p.m., because, well, I guess that event will probably start a little late. We're going to talk to the governor of Alaska, back with us on Balance of Power. We've got a thing going here. Mike Dunleavy is going to join us to talk about preparations and exactly what is happening right now. This has got to be a scene right now in Anchorage. Limited hotel rooms, a small rental car market, I read on the Bloomberg. Vehicles and other assets have to be flown in or driven in some cases, from other parts of the state and the country. Motorcade SUVs are arriving from the lower 48 on cargo planes. Imagine being the real estate agent who got a phone call from the Secret Service. And I'm talking about this because Miles Miller has a great story out today on the Bloomberg. Secret Service rushes to make Alaska City safe for Trump and Putin. Yeah, we're the host nation, which is why the Secret Service actually has to protect Vladimir Putin as well, along with the whole production, which is going to take up the better part of the day tomorrow in Anchorage. Great story, and we'll talk to Miles about this on the late edition. We get a phone call from the Secret Service. Most of my short-term rentals are booked, but I did manage to put some of them into one home. Pack your sleeping bags for this one. The advanced crews are up there already, and be interesting at dinner this evening in Anchorage to see who's floating around, what country they're from. Looking forward to that. Mike Dunleavy, the governor of Alaska, coming up in about 15 minutes as we turn our attention to what's happening today in California. Yeah, not Texas, but California. There's going to be a news conference a couple hours from right now. Gavin Newsom set to kick off Democrats' reciprocal effort to gerrymander. It's apparently happening here as Texas Republicans move forward with their plan to add 5 seats. Now, we've talked about this until we're blue in the face, no pun intended, with our political panel. I think we've talked about redistricting every single day here for the last 2 weeks, right? We're going to do this again right now because as California gets involved, the cycle begins. Some think it would be a spin cycle that involves maybe even up to a half a dozen states. Add Indiana, Missouri, Florida. What's the congressional map going to look like by the time this whole effort is done? There they are on YouTube and with us live on the radio, Bloomberg Politics contributors Rick Davis and G.D. Shanzano. Rick is our Republican strategist partner at Stoneport Capital, and Jeannie is Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. You ready for this, Jeannie? I don't think you wanted to see it happen, but it looks like Governor Newsom is going for it.
He absolutely is. And, you know, I have to say, as a political scientist, there's nothing we like more than talking about the boring old issues of redistricting. So I've been in my glory the last few weeks. Thanks so much to Governor Abbott and President Trump. Yeah, he's going to go for it, despite the fact that we've seen polls which suggest that it is widely unpopular. And that's something I don't think any of us are surprised by. People don't trust politicians. They certainly don't want them drawing districts. For Californians, twice now they voted for an independent commission. Quite frankly, I was surprised the numbers weren't even higher against it. And yet, when you look at and talk to people in focus groups and elsewhere about whether they should do this because the Republicans are doing it in Texas, they sort of shrug and say, this is like an arms race. One does it, the other has to do it. So it's going to be interesting to see what voters feel about this in the end if California goes forward with it.
It's interesting because apparently California doesn't really want to go forward with it. This new poll that I'm reading about here is Citron Center poll in Politico today. Rick Davis shows voters in California prefer keeping an independent line drawing panel to determine the state's House seats by nearly a 2-to-1 margin. Is this a mistake for Newsom?
Well, you know, look, I mean, there's a generic issue here, which is voters really dislike their own members of the legislature, right? So it's not like they want to give them more power, especially California voters, where the legislature has been usurped by all these ballot referendums, whether it's making tax decisions or drawing lines. A commission is always going to be a legislature, but this has to be done through a campaign. They're going to have to run a campaign to convince voters that this, you know, retribution to the Texas redistricting is worth it for them. And, you know, frankly, I think it's going to be an interesting campaign because if I were running the Republican Party right now, I'd say, let's get in there and mix it up with those guys, right? I mean, like, this is a good thing for Republicans to try and run a campaign against Newsom because it's his credibility that's at risk here, right? If Newsom stumbles on this, it will hurt his chances of being the nominee of the party.
Okay. Well, you've talked about dummy mandering, not to be confused with gerrymandering, Rick. And I'm wondering, Jeannie, if you see that as a risk, just like it is in California. Republicans can't count They're chickens here until we actually have these seats. They assume they're going to be Republicans. Should Newsom assume that they'll all be Democratic?
No, and that's the thing. This is a risk. You cannot assume, because let's not forget, no matter how well you try to draw these districts and how much data you have, you still have to run a campaign. You still have to have candidates. There's still a whole environment of issues going on, including the passage of a most unpopular big beautiful bill. And so, we look in Texas and we see that Republicans are banking on the fact that Donald Trump will do as well there as he did in 2024. But you look back just one cycle earlier in 2020, Joe Biden won many of those districts, and Trump, the ones he did win, he won by a lesser margin. Same thing goes on the other side with California. So this is full of risk. They are trying to play this game. I think they might be better off putting, redistricting aside and focusing on passing bills that are popular and putting up candidates and running campaigns that are well-funded and popular. So it can be seen as a waste of money if you look at it from that perspective.
It's been quite an exercise watching Gavin Newsom on Twitter this week, Rick, the last couple of days, including, just one today, right after we woke up this morning, we saw this one. Your favorite governor, Gavin Christopher Newsom, he's writing all of these as if Trump was writing them, and they're in all caps. Offered the best, most amazing deal in history. Stop rigging Texas maps, and California won't make ours more beautiful. Sadly, but no surprise, Donald was too weak in Perren's little hands to even write me back. What's going on with the Gavin Newsom experiment, Rick Davis? You've run presidential campaigns. Is that all this is about?
Look, it's all part of the Gavin Newsom campaign for president in 2028.
Yeah.
It's a dangerous game. Donald Trump has a history and a personality that can sustain this kind of demeaning of people. He's proven it over time. When Republicans were running against him in 2016, some of them tried the same thing, and it was a disaster for them. And so I think there's a big caution sign out there for Gavin Newsom. And yet, at the same time, the one thing the Republicans in Texas are doing is unifying the Democratic Party around Gavin Newsom. And so, there's a situation where the Democrats were in complete disarray until the Republicans in Texas decided to start playing with maps.
Mm-hmm. How does this hit you, Jeannie, this kind of talk? They're funny. As many know, he said in a different tweet, Donald Taco Trump, author of Art of the Deal, a book he should return to the library, just missed the best deal in history. He always chickens out. Tariffs, China, but even a chicken should know a good deal when he sees one. Is he making you laugh? Is he making you take him seriously as a presidential hopeful?
Yeah, that one was to me a bit cringy. I know I'm not the audience for it, but I think there's a danger for Gavin Newsom, and Rick just talked about it, and I would just add that people want authenticity. And if this doesn't come off as authentic, and certainly just look back at our current Secretary of State, Marco Rubio tried this in 2016, not authentic at all. You need to be who you are. That is what people want. So Gavin Newsom trying to be Donald Trump probably isn't going to resonate with too many Democratic voters. And I think that's the danger here. So he's going to have to watch out for that. He should be Gavin Newsom, and he should run as the person that he is, and to see if that resonates.
They're trying to troll him. That's what he's trying to do. Please go to my store, the-studio-reykjavik.com, and get the Boomer Boost. Boomer Boost is a supplement that you take every day. If you want to lose weight, it's a great way to lose weight. If you don't want to lose weight, you can still take this. Now, to lose weight, what you do is you take this for your breakfast or for your lunch and mix it with soft foods like hummus or yogurt. Do that every day. And you'll safely lose weight, and you'll have a steady burn of energy throughout the whole day. So you won't have any spiking of energy. It also will help to improve your cardiovascular health, musculature, your energy levels and metabolism will rev up. It'll help with brain function. In terms of brain function, it's going to get rid of that brain fog. You're going to be able to sleep better and be able to concentrate. And over time, you're going to improve that neuroplasticity. You're going to have more energy and more vitality, so you're going to be moving around more, and you're going to gain muscle. So this is a great way to get healthy. Now, if you're not wanting to lose weight, then you just eat your normal calories throughout the day, and you take this supplement, either mixing it with soft foods, filtered water, milk, or even a smoothie. But this is a very important supplement to add to your protocol. It has 68 nutrients, very comprehensive compound profile. Go to my website and read the label, but take it every day. Super important. Another great supplement that's in a powder is the heirloom barley and the gladiator barley. Heirloom barley is a powder that's a high density protein. You take it every day, mix it with soft foods or filtered water, milk, or a smoothie, and this will bring down inflammation. That's going to help your immune system. Bringing down inflammation will help with your vascular system. Bringing down inflammation will help with your neurons. Bringing down inflammation will help with your immune system. And it'll soak up free radicals through superoxide dismutase. In addition, heirloom barley is going to detoxify your body. So taking this every day is super important for that daily detoxification. This stacks well with the zeolite also. Now, gladiator barley, you take it the same way as heirloom barley, but you get one added benefit that the heirloom barley doesn't have, and that is it'll help you build muscle faster. So if you're wanting to improve your musculature and improve your A1C levels to its max, then taking the Boomer Boost and the Gladiator Barley together is a great way to do it, especially if you stack it with Myotrol. Now, Gladiator Barley, it's a high density protein. Take it every day, take a scooper a day, mix it with soft foods, filtered water, a smoothie, or with milk. But you're gonna get that strength benefit. You're gonna bring down inflammation, you recover from your workout quicker. You're gonna be able to soak up those free radicals through superoxide dismutase. You're gonna detoxify your body. And daily detoxification of your body is super important. So please go to my store, get the Gladiator Barley, the heirloom barley, take either one, and get the Boomer Boost. So, and stack it to get the max benefits. Stack the Boomer Boost with the Gladiator Barley or the Boomer Boost with the heirloom barley. Or you can take them separately. It's up to you, all right? But please go to my store, the-studio-reykjavik.com. Get the great supplements I offer. Use discount 5, get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. Thank you for listening, and have a nice day.